Very good morning, everybody. Welcome to February the 6th, and we're approaching FTSE all-time highs. We're right on it, Chris Feacham.
I know, the excitement is almost palpable, isn't it?
Chris did ask if the FTSE reached new high, do balloons start to fall from the ceiling?
You should wear party hats. You want party hats and streamers?
Oh, the buzzer. We need the buzzer.
Somebody get the buzzer for after the break. We'll get the buzzer.
No, Fred doesn't like the buzzer at all.
No.
How are you, everybody? Good morning to Monkey Man Gavin Ackers. How did you find that link, Gavin Ackers? I tried to keep that quiet from everybody yesterday. Carla, good morning. Morning, people. And to our Spider-Man friend, good morning all as well. Yes, we have an interesting evening last night of numbers, a real two-way pool yesterday. I don't think I've ever seen Alphabet down 7 and Nvidia up 5.
No, it was a mad kind of session, mad kind of day really for markets.
And pretty much opened on its lows and then just went higher all day.
Yeah, well, you had your dip in Nvidia, you've got to bite with both hands, really. That's the key thing. And to think how well tech stocks have done to weather the storm of the past 2 weeks. You've had DeepSeek, you've had tariffs. Do they care? No.
No. And some, well, admittedly, AMD hasn't survived it.
Oh, yeah. You've got to feel very, very sorry if you put all your money on AMD because it just can't catch a break. It just gets worse and worse. It's so sad. Sad, as the man would say.
What about you guys? Neanderthal neighbour. Now, there's a new one to the chat. I don't think I've seen Neanderthal neighbour before. We need the story behind that. A very good morning to you, everybody in the chat, everybody watching on the app as well. We've got quite a few things to go through. But first of all, let's see what is coming up on today's show. And what's coming up in overnight action.
It's just a well-oiled machine, isn't it, really?
So, yeah, coming up on today's show, we've got the All Sessions opening bell with the one and only Mr. Will McCreary. Yes, we stole him away from Saxo Bank, and we've got him in for that 9 a.m. opening. And there was quite a lot of numbers to watch for in that all session, so that's going to be interesting. Then at 9:40 a.m. we've got trading experiences. Yes, we're back with James Gordon and hearing all about James' experience as he went full-time trading for a couple of years before we managed to get him back to look after our taxes.
The joys of tax. There's a lot, really, isn't it?
Yeah, the joys of tax. Yeah, that was the better. He still has a go. He still has a nice...
Yeah, he's very active in our little Trade Invest chat on Teams from about... Well, I'll let him tell those stories later.
And then 10:05, Trade Expectations with Patrick. Patrick's back with Angeline for Trade Expectations.
Our new Swedish analyst. That's very exciting.
Yeah.
You are a diplomat's dream. You really are.
Speak all the languages.
Yeah. You do.
And we were having a little go at French this morning as well, weren't we?
Yes, with producer Fred. And what was it we were saying? Oh, a little resistance. Yes.
Fred was talking about his experience of technicals when he used to work at Bloomberg back in 2002. And he was saying, yes, a little resistance. And of course, Chris, being the war buff, just heard this and he looked across and thought we were discussing the...
I just think it was so beautifully put. It was just a lovely thing to hear at that time in the morning. Just elegance, shall we say.
And I don't think Fred's ever been described as elegant before, so there's a compliment for him. Right, let's look at this FTSE 100, people, because you can tell the excitement. We thought, is it a little bit too good to believe? Last week, Friday, 31st of January, of course, before the tariff chaos, in which it dropped from 86.85 down to 85.50, we've got all the way back up there yesterday and today, ahead of Bank of England that we've got today at midday.
Rate cut day.
Rate cut day. We strongly believe the third of the cycle now. It's getting down there. It's almost, time to renew your
And
mortgage.
more to come. Oh, shut up. But more to come this year as well, of course. More cuts this year.
We were chatting about mortgage rates and savings rates before we came on show, and there's a 5-year fix available now at 4.75, and I just fixed a savings rate for 3 years at 4.61. So it's really interesting. Spread 14 basis points between savings and mortgage at the moment, and it was with Investec. If anyone's interested in the savings there,
you're turning into Martin Lewis at this rate, aren't you?
Oh, geez. Oh, one day. Now I can see you as a bit of Martin Lewis.
Really?
Yeah.
Okay.
Helping
the good people of this country save money. Yeah.
Yes. Apart from my sisters get so angry because my mum listens to his program, and whatever he says, my mum wants to go and enact. But my sister, she doesn't use the computer, so my sister has to go and do it all for her, all about pensions and credits and all this stuff. Yeah. Angeline, good morning. On her way across the bridge as we speak, running with her phone in her hand, no doubt.
I think I can see her as she goes.
Saying good morning to everybody on the way, I'm sure.
Yes, running into people left, right and centre, probably type and run at the same time.
Steve's on the chat. Good morning, Blake 7 and the British Indian back with us again. The AMD made you sad yesterday. It made me a little bit sad. I wasn't too hurt by it. I am short puts, but down at the 90 level. And all you non-believers in Palantir, who thought I was going to lose money in Palantir? It was never going to finish above 102. So yeah, we had a nice drop back there, 101.36 in Palantir. But yes, I did lose some money in AMD yesterday. Just seeing where that is. You can see it down there. I am short 4 of the 90 puts. So yeah, lost a bit. But to be honest, so much of the vol dropped out of it.
Yeah.
After the earnings that it didn't drop by too much, didn't lose too much.
It must hurt though when people go on and on about tech stocks doing so well, and then you've got AMD. It's a tech stock. It does chips.
That's it.
And it doesn't go up.
It's meant to be in that area where it's going to be winning. And if you actually look at the chart in AMD, it is brutal. It's 160 down to now where? Let me just check I was shown this last night in we did a tasty workshop last night that Miss Arsaksena was very graced us with her presence. So it was wonderful to see you again last night for the tasty workshop. We have got another one coming up next week. So before I forget, if anybody would like to come and join us, we've got 6 spots left. It's at the IG offices. I think it's 2:00 in the afternoon on Thursday, the 11th of February. Tuesday, the 11th of February, 2 p.m. Email me at richard.mcdonald@ig.com or ask@ig.com and secure your spot there for a tasty workshop, basically right from the basics, how to use the platform. And yeah, we've got 6 spots, so don't hang back. But yeah, AMD, sorry, I've just shown that. It's come all the way down from 168 to now 112 in that downtrend. Blake 7, is AMD going to drop to 90, or are we seeing the opportunity here? That's the big question.
Because it had a terrible run from late 21 and then bottomed along with everything else at the end of 22. But
yeah,
it's just lost its way, isn't it, really?
It has. It needs, it needs some kind of strategy day or something like that to get itself.
It needs a good away day. That always sorts it out, doesn't it?
If only it had numbers as good as Glaxo. What a performer yesterday.
Stormer, the top mover on not just the 100, but the 350 as well. So
it's probably unlikely to have ever happened before.
Yeah, I think that's one of those rare occurrences, the probability of that. But very, very, solid numbers all round for Glaxo, and such a great performer really, and such a great dividend to go with it as well.
And I wouldn't have expected Glaxo to be raising guidance.
Yeah, but across the board, a very, very positive outlook, I think, really. And it's just excellent recovery, I think, from what it was tough, a miserable end to last year, really. I mean, yeah, it's a long way off from where it was.
Yeah, that's yeah. So, is there more upside in this then? Is it suddenly? Let's look at the short-term chart of how it traded through the day to get more of an idea if there are big buyers in there. It does look like it. It not only did it open higher, but it traded higher throughout the day, albeit the market did as well. What's that going to do this morning with the FTSE looking up another 70 basis points this morning? I would imagine Vodafone might get a bit of a help from that as well, Chris Beecham.
I think so. Very, very solid from Vodafone yesterday. Of course, it's like Christmas for you, isn't it? 4 times a year Vodafone trading statements. It's just, I'd never really understood your obsession with the stock because it's never known as the most exciting name in the world, is it? But
well, this is because they've done it again. Goldman Sachs, 27 million shares they bought yesterday. So that was 28 million into the 7% fall. Clearly driving the stock higher yesterday to finish up 2% on the day because Goldman's are buying 27 million. This is the reason why I'm so excited about them, Chris Beecham, because 25% of the volume every day is the company buying back and then tearing up the shares and destroying them forever.
Is that the best use of its money? Is that use of, I mean, share buybacks? We could debate this one because this is always the thing about US markets.
If it makes it go up, I do not care.
You don't care. No, it's fair enough. But this is the thing about US markets, always buybacks make markets go up. And it's not true, of course, but is that the best use of Vodafone's money? I don't know. You are the Vodafone maven at this point.
I mean, admittedly, they haven't used much of it because they've received 13 billion euros from those 2 deals and they're only using 4 of it to buy back.
Okay.
So a lot of it's getting paid down debt. Some of it's getting reinvested back into Germany to try and turn that shambles around.
So more money after bad?
More money after, yeah.
8 times earnings, but and what? Dividend yield of 8.7, according to Google Finance. Well, that's what Google Finance is telling me in front of me. I can check that one properly. But
well, it's 4 pence, so 4 over 66.
Yeah. Don't make me do that in my head.
I think it's about 6.
Well, even so, I mean, 6%.
Yeah.
Like a bank account, really, isn't it? Shame about the capital depreciation. But
it's true. Why did I put my money in a savings account at 4
Put it in Vodafone.
Yeah.
That's not advice, by the way, for anyone writes in.
Right, so yeah, that was yesterday. What about today? What have we had out from AstraZeneca this morning? Let's take a quick look at those headlines. They seem to be good results because it certainly helped the FTSE higher. It's a small beat on earnings, a small beat.
Total revenue up 21%, core earnings up 19%. So
there we go, high single-digit percentage, and with the outlook, EPS expected to increase by low double-digit percentage. That's decent.
Yeah, from that kind of company, I think you're not expecting fireworks of double digits, are you? But I think high single digits is what it was. It high single or low single? High single digits.
Continues to fully cooperate with the Chinese authorities because that's the thing that really worried people a few months ago. So yeah, and also Glaxo comments yesterday were interesting. That was saying that they should escape tariffs because so far medicines have been immune to any tariffs because of course the product that it is.
Right.
So you can take them out of the tariff wars. No Diageo there.
I was looking at, if you look at Glaxo compared to Astra over the last 10 years, Glaxo, including the dividend, total return is about just shy of 8% a year. But for Astra, it's 14% a year.
It's been incredible.
Exactly. All your money in Astras 10 years ago, there you go. Why didn't we do that? But there we go.
Easy.
632% return, total return over the last 10 years, according to Reuters.
Really?
Yes.
I think that's better than the S&P as well.
I think so, yeah. So, yeah, just go back in your time machine and buy Astra.
Quiet, boring FTSE that nobody likes. There you go. The biggest company in the market.
Yep. And you could have probably had it with less volatility on the way.
Yeah. It's a little matter of COVID vaccines and things like that. But good. Okay. Gavin Ackers, thank you for popping your bullish watches in there. What have we got? Lululemon, that's numbers of today, I think, pre-market. Am I right on that, producer Fred? Can't no, possibly not. Netflix, yeah, in there watching. But also today, we have numbers from Amazon, that's after hours, Eli Lilly, ConocoPhillips, Ralph Lauren, and also Honeywell. Honeywell's an interesting one. Watch out for any news on a breakup of the business there. We were just about to go on to Diageo. The interesting story in the FT this morning on Trump tariffs, but will they lead to US brand boycotts? And that is, we're looking at Jim Beam, the Japanese owner, has questioned, will the tariffs, global consumers will boycott its American brands as part of a backlash to the protectionism?
I mean, I've seen a couple of these headlines. Apparently, Tesla sales in France are down heavily because of Elon Musk.
Right.
And obviously, you've got the Canadians. It really got quite nasty, didn't it, Monday, with people booing the national anthem and people saying "Buy Canadian."
Yeah.
Is this the kind of thing that gets headlines but doesn't really change anything?
This is the thing. Like media, I stopped believing completely in media when I was in Istanbul in 2014. And I was in the, I went to a Burger King and I was sitting, because they didn't have McDonald's, I wasn't happy. Sitting in Burger King and unknown...
Because there's no other food in Istanbul, is there? Really?
Well, there was a reason for it, because there was a protest against President Erdogan going on in Taksim Square.
Oh, okay.
And I thought, right, the Burger King had 2 levels and you just perch yourself there, got a cup of tea and watched the whole thing unfold. However, it started to get quite nasty when the water cannons, big police water cannons came out and they started. So, got down out the Burger King and I start running down the street along with everybody else. And I got a video of it. And then turned into this side street and a taxi was going and I kind of waved and sort of said, help, can I jump in? Jumped in the taxi. The taxi took us about 7 minutes away from Taksim Square and dropped us on the main road. And there were people sitting outside sipping their teas, smoking the shisha, everything. The world media made out like this Istanbul was on fire.
Yeah.
And it was one tiny little area which, was like a water...
Yeah, well, it's true of anything, isn't it, really?
But the media, so they love their clickbait. And
well, I've got to get a headline, haven't they, really? So,
and Trump's giving them it.
Yes. Oh, yeah. And there's some great sort of interest stories around this about people obviously not buying American. So that's going to fuel things. The tariff story is important, really. The FT was saying they could shave about 3.5% off operating profits. So it's not been a great couple of years for Diageo sort of, and the drink sector generally.
Yeah.
Dire
performance. But it was just, I felt it was it over responsible of Diageo to highlight that it might hit profits by 200 million.
Yeah.
For something that doesn't exist.
Kitchen sinking exercise, because then if it doesn't happen, you can come back in 6 months and go, oh, look, it wasn't as bad as we thought.
Yeah.
We've beaten forecasts, shares go up.
Or
the next strategy, you might call it, put in all the bad news in, and then lo and behold, you beat forecasts.
The next strategy, because he's done it for 15 years.
Yeah, and no one seems to get bored of it every time.
Yeah, it's true.
Oh, they've beaten again. Oh, there we go.
Let's look at the daily chart of Diageo, though, because it has been a shocking performance.
Not much is in that one, is there?
Oh, dear me.
Sorry.
Yeah, God, it's Distill on its way down. 20
crowbar that one in there.
22.33 now. Jeez. This for a defensive stock.
I mean, to be fair, it had a fantastic run after the financial crisis, didn't it?
Oh,
it
absolutely.
went from 10 quid a share to 40 quid by Because that was the thing about drinks, wasn't it? Everyone's going to be at home drinking themselves silly because there's nothing else to do.
True.
And they've all got lots of money because they've been given money to stay at home. And that's the thing about they're going to trade up to more expensive brands.
That's right.
And now we're all back shopping at Sainsbury's own gin. Sorry, that was inside my shopping basket there.
And apparently not interested in Don Julio tequila anymore.
No, well, the great tequila craze has gone. Which is next? Which is the spirit that we've had?
Has
gin.
it gone?
Has it? Well, it's kind of
It's on to Guinness.
peaked.
But they've got that, so...
So what we've had gin, we've had tequila. Is it rum next? The sort of expensive rums?
We should look at... No, non-alcoholic, that's what it is.
No, don't start this. Flavoured water.
Literally, Michaela, our Australian girl in the office that is, fuller than life, was drinking non-alcoholic, zero alcohol. When an Australian starts drinking zero alcohol...
Something wrong there. I tried the sort of zero alcohol gin. It's just floral water, basically.
Yeah.
For which you paid, what, £10, £11 a bottle?
It's true. With it, if you're actually, if it doesn't have alcohol in it, then is it gin? Well, we'll ask Angeline. She's the expert on that. So look, we've got the FTSE. We've got 10 minutes until it opens, so we're going to start seeing those early auction prices. We've dropped back. We're about. Let's get this so we get the exact point that is the all-time high. Axel would be proud of us. It is 86.93 by the looks. 86.93. So we tried. We went higher. We reached the new all-time high at 97, but it has dropped back to 86.80 now. So let's see how that goes on the open. Mining stocks should be strong because copper is on its march higher. Copper now $452 or 9,300 if you prefer the LME price. So Anglos is going to be interested in that because Anglos did have a production report today, and a little bit weak on copper actually, down 14% on the production. I'm just trying to get the here we go. Forward production guidance unchanged, with growth driven by higher grades in Chile. Iron ore production increased by 4%. And De Beers, difficult rough diamond trading conditions. The CEO of De Beers was on television yesterday, and it was embarrassing.
Why? Was it Car Crash TV?
Saying he said, the popularity of fake diamonds is growing.
Fake diamonds.
We need to be better at telling the story. I was thinking, everybody knows the story. They know where the diamonds come from.
You don't have to sell it. It's a diamond. It clues in the name. Surely.
But he went down the amount of time that it takes for it to develop in the Earth's crust.
Oh, you mean those millions of years? Yeah.
The millions.
You can make them now, can't you? Make artificial diamonds.
And this is it's really impacting trading. Difficult rough diamond trading conditions mean we've reduced production guidance. Oh, trying to corner the market even more.
Yes.
Reduced production guidance in 25 and 26. EBITDA at De Beers to be marginally negative.
I was looking at copper. Deutsche Bank saying copper very exposed to a global trade war, as you might expect. And they're saying copper will average $9,000 a tonne in the first half of 2025, or 8,000 under an aggressive trade war scenario. So that's quite interesting.
Interesting. That's very bearish.
Yeah, but they said, there's always a but. Recovering global demand in the second half of the year, when you might see it go towards 10,000 by the end of 2026. The market is moving into. So I'm just reading off this. The market is moving to a structural deficit because of underinvestment and limited supply.
The famous structural deficit that we've been hearing about for 3 years.
You just have to use the word structural deficit, and it goes, oh, okay, fine, and then
copper.
Yeah.
But how is it doing on my channel that I've had there for
that's nice.
Probably about 2 years, I think I've had that.
It's always nice when you put a line or a channel on a chart and then about a year later it comes back and you go, see, that's why I put that there.
It
does work.
happens all the time. I've got one in the NASDAQ from about 5 years ago. and it's still there. I'll have to have a look.
Oh, is that the weekly trend line? Some people talk about the 200-week moving average, and they go on, see, it's back there again.
Oh, God. Mean reversion at its best.
Yeah.
So that would say we've got another 2% in copper before we hit any resistance. But yeah, that's my amateur guide over Axel's. Axel will probably
if you had
dying watching this.
Yeah, I think I can hear him crying at this point. You should get him in to talk about your dodgy channel drawing and see what he says.
That's right. Yeah, Axel hasn't been in for a while, apart from his fundies. We'll have to get him back in. We'll see you in 3 minutes for that opening bell.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered, live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
I'm Ben Hemmington and I head up the sustainability function here at IG Group. IG Group pledges 1% of its annual profits and directs this to community initiatives. This is a pretty significant amount of money. We're talking several million each year. And I used to work in the charity sector, so I have first-hand experience of just how much of an impact this money can actually have if it's used wisely. In particular, we are focusing on empowerment through education, so looking to see how we can empower members of our community that are disadvantaged in different ways by providing access to quality education. It's an area of work that we're really proud of and that we're having a really excellent impact in. On the IG Group website, we have a download centre which has got lots of information about our sustainability function. Here you can find out more about our product governance, about responsible investments. We have documents around our diversity and inclusion, including a D&I statement, KPIs and targets, as well as our progress against these. You can also find a number of documents relating to how we manage our environmental impact. And then also on that download centre, you can find our community impact report that talks all about our Brighter Future Fund and the impact that it's having.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Right, just getting some early indications in and also some research from our good partners over at Numis. We've got Watchers of Switzerland comment. So, Watchers of Switzerland have had numbers. They were referenced as having good trading in both the US and UK and further stabilisation. Now, remember, Watchers of Switzerland was up 16% on the Richemont, or since Richemont reported. So that's going to be an interesting one to watch this morning.
On the face of it.
On the face of it.
Thank you.
Let's see, we've got just 55 seconds of TikTok ready to, until we've got that opening bell.
Excitement.
Welcome Claude Royer. There we go, from Geneva, tuning in. We're going international.
Global, isn't it?
It's incredible. Where else do we have people logging in from this morning? Very keen to hear. Who's the furthest? Geneva is at the furthest at the moment. Right, so yeah, things to watch on the open. SocGen, Astra, Compass, Watches of Switzerland, and Anglo American. And just checking if we have any obvious upgrades or downgrades. No, it's too busy on the earnings to have the upgrades and downgrades today.
Just a couple. There was Greencore was upgraded by
Do you want
Deutsche.
to count us in?
3, 1.
The bell is back, people. The bell is back.
I need to get some earplugs for this. I really.
It's the all-time highs. I've actually hurt my own ears on doing that one. Right, off and running. Down 75 basis points for Compass. Anglo's up 1.9. Those miners up, up and away. Watch Antofagasta. That's the main beneficiary from copper breakouts. Lloyd's up 1.16. That's interesting on Lloyd's because there was a story, a negative story in the news yesterday on them potentially having litigation against them. Didn't expect them to be up.
Litigation against a big bank. That's a new thing, isn't it, really?
AstraZeneca up 2%, Chris Beecham.
Excellent.
Has that taken the FTSE to the highs on the open? It is. Yes, it's right there on the breakout. FTSE trading on that tick to the tick.
Darcy blows. A new
What's it going to be? Oh, I'm tempted to buy them for the break, but I don't want to jinx it by buying it, so I'm just going to sit back and watch.
Don't spoil it for the rest of us.
Right, back to those. If we're strong on the miners, we're strong on the farmers, then this has a good day written all over. And the banks.
It's because if you get rate cuts, the BOE, it's good for the economy, so that's why they're positive. And Lloyd's, big mortgage division, obviously, so in one sense, it's not great if you're cutting rates because it hurts income.
True.
But you want the economy to limp along at best. So, good reaction.
Right, so no indication yet on Babcock. Watches of Switzerland up 2.8%. So further moving after those Richemont. That was your sign to buy this thing. Richemont, good watch sales. Watches Switzerland now up 18%, 19% since that number. Antofagasta, there it is, up 2.3% on the copper move. Glencore following higher as well. I should have kept those 340 on Monday morning.
Woulda. There you go.
Ah, that's frustrating. So from that tariff dip, Glencore 4.5% higher. Anglo now up 2.8. Do we have any losers? Please don't be Vodafone. No losers on the FTSE.
I would have expected more from Compass after that decent update this morning. It was fairly solid.
Yeah, you would have thought they would have had a better direction.
Yeah, but then they're up. Oh no, that's the wrong Compass. That's New York Compass. Sorry, bear with me. Compass Group. There we go.
Shall we get a quick update on Europe? Is Europe doing as well this morning? Well, Philips are up 1.4. Schneider up 1. Deutsche up 80 basis points. Have we got a look on SocGen yet? No trade on SocGen yet. Must be a decent one. German autos are the losers of the day. That's on Ford numbers being absolutely shocking last night. Ford looking down 6%, I think it was. Yeah, 6% on numbers after hours. So that's feeding into our auto moves this morning.
It's miserable, isn't it? Terrible.
Do we have a look on Adidas? Adidas up 55 basis points. That's one I'm always keeping an eye on. And Infineon is continuing higher after the numbers. Remember, they had really good numbers. Wow, there must be an analyst
upgraded by Morgan Stanley this morning to overweight price target of €40. So there you go.
This is when, if you really know a stock well and they come out with good numbers and you've got an idea that the analysts are going to, you get that upgrade cycle.
Yeah.
You get the chance because you could have bought these at 34.50 yesterday, now trading 37.30. In fact, you could have bought them at €34 on Tuesday.
Stop rubbing it in.
You could have.
If you could have, if only you'd had a crystal ball.
But yeah, let's see if that's fed into tip ranks. Morgan Stanley, there it is, a €40 target. That's 15.9% upgrade there. So yeah, that's Infineon. Now, let's go back to seeing what our big stocks are doing. AstraZeneca holding the gain, not kicking on from 2 up 2. But we do have SocGen open, and that is up 6%.
Wowzers. Storming performance.
That's your European bank story.
Yes. Yeah, so there's a stat yesterday. If you look at European banks from the beginning of 2022, it's obviously a terrible year for tech, but they've outperformed tech stocks since the beginning of 2022.
And this is, everybody thinks you've got to be in the NASDAQ.
Yeah.
European banks on fire. AstraZeneca would have beaten, that's got to be along there. Did you say 680% over 10 years?
Yeah. Yeah, 14% a year.
I wonder if that rivals the NASDAQ.
Let's
Perhaps
have a look.
not.
Bear it with me. Give me a moment to work it out.
It's not too far off. It's better than the S&P, but I don't think
I can use my total return function in Reuters. I love it because it tells you, obviously, it tells you what the price return is, and then you include the dividend. So you can have great fun looking at if you'd bought so and so.
And did that include the dividend on Astra?
Yes, 14% is including the dividend.
Got you. So you definitely get a lot more income than the NASDAQ. Anglo's now up 3.2, and Antofagasta up 2.2. So yeah, miners are helping. Let's go back to FTSE Watch. We're at, no, there it is. It dropped away, 8686. It's going to wait for the Bank of England, isn't it? It wants to just have some clarity there on the rate cut. Is Andrew Bailey going to cut growth forecasts, Chris Beecham?
There was a possibility in it, I think, and that's going to, because there is an expectation that they're supposed to cut by about 80 basis points more this year or so.
Yeah.
But I think, and I did say this in December, so it's not just me saying it now, but I think they have to go more. So I think if you're cutting the growth forecast, then that gives you the space to actually say, now we need to do more.
So why is cable at 124.70? Why is it not at 121?
Well, it's all about looking ahead. And if you've got a Fed that even now is, okay, with the tariffs and stuff, there was, they'll have to raise rates. But even then the pricing was saying they might have to cut rates more. That was a really interesting thing about Monday, wasn't it? They were saying 3 cuts rather than 1 this year. So if you're saying actually the Fed will continue to cut, having been more hawkish over the last 6 months, then you're sort of the forward-looking says actually maybe the dollar's at least overdone in the short term because it's had such a fantastic run because of Trump and tariffs and the Fed being a bit more hawkish. So it's looking at it relatively. I understand the common sense view should be, well, no, you buy the dollar over sterling, maybe in a sort of 12-month view.
Yeah.
But in the 3-month view, maybe sterling's due.
Right, okay.
Some kind of rebound.
So the dollar's gone too far.
Yeah.
And it just has a bit of consolidation even.
Yeah, exactly. Sideways movement, maybe a bit of a rebound for the pound just to get everybody nice and optimistic.
and then
you're coming with a hammer.
Unless you had a significant deterioration in the UK and Europe.
Yeah.
And even upwards pressure in the US. Okay, I'll buy that.
Good. That's the key thing. As long as I sound like I'm making sense, it doesn't have to be bright. As long as it sounds like it's sensible. That's the most important thing.
Now, talking of things that may have gone a little bit too far too quickly, is it time for gold to have a breather?
Oh.
We've moved since the
look at it go.
Year to date, we're already up 230, and I'm the gold bull, and I'm thinking it's maybe just drops back to...
It's all getting a bit too silly. Isn't it at this point? Which is because you go through this feeling when you're long something, it goes up and up. Think this is fantastic. It's just going to go, and then that little nagging voice of doubt goes, "Oh, I don't like this now." And you see all the headlines, don't you? Oh, gold's going to 3,000. You should be long gold. This is how you get long gold. I think no, that's the kind of time when you think the sentiment just starts to get a bit too toppy in the short term.
Yeah, I thought we might get through a whole show without a Monty Python quote.
Sorry, it's all getting a bit too silly, I think, is one I use a lot, because that's just how markets are. They just get too silly, both on the upside and on the downside. really.
And of course, there's been all this talk about, the gold bullion, us running out of
yes,
bullion.
it's all in the States
England.
because we're shipping it to the States ahead of tariffs and stuff. Yeah.
Yeah.
So,
What I didn't know until last night is that I learned that if you buy from the Royal Mint directly, and it was our 6 Centre that taught me this, then there's no capital gain.
yeah, because it must be some archaic rule.
That it's official
Specie.
currency.
Yeah.
Yeah. So
So that's where you're off to this afternoon, isn't it?
off
You've got
the
a
Royal
bag.
Mint.
If you see a Scotsman carrying a large bag, try to mug him because he's just been to the mint.
Oh, well, they don't have any left.
No, it's all in the States. You've got to fly now. You've got to book your business class flight to the States as well in the process. Don't
So
charge that to us, by the way.
I think 2008. I think we'll see 2,800 in gold. So I have gone short. I'm wrong already, but I'm tempted
It
to
takes
add
a brave
more
man
here.
to stand in front of an oncoming train.
But I've got them in my pension.
Yeah.
So
But then, sorry.
yeah, no, go on.
I was going to say, look at the rally from July to October. If it wants to keep going, it's going to keep going. I mean, if it repeats itself, history could repeat itself.
Now, how's that for a line? Because that was also drawn a few months ago.
I think if you squint, it just about fits, but I think your channels need a bit of work.
So well, there we go. So I'm going to go short at shorter 900.
Even more, damn it.
Yeah, I don't know. What's something like a platinum or palladium doing? Because that's something that
They've come back nicely from the lows, but they've just not joined in, have they, really?
it just
Silver too.
never.
Silver too, though. It's the industrial element, I suppose. Would that be the case, he says?
Well, that's what I'm surprised that copper's starting to go. So you've
That's
got
your structural deficit, you see.
that's right. And is silver not in a structural deficit? No,
I
probably
don't
not.
know.
And I guess platinum's just got no demand because we're all moving to electrical vehicle.
Yes.
Oh no, we're not
Oh, no.
anymore.
Even though Vauxhall's closing its Luton plant, isn't it? I think next month was the news this morning.
Right.
So to shift production to electric vehicles.
Palladium's had a little bit of a rally. A little bit, but nothing. If we could get back up, that's my call. If palladium manages to crawl its way back above 1,075, that starts to look interesting for a second run
Yeah.
towards 1,200.
Yeah.
Buoyed by the chance that the hybrids are longer.
Yeah. There's a retreat from EVs and net zero to an extent because of Trump's now in. Yeah.
Let's call it the anti-Elon trade, not as an uncle, but
The silver market's forecast to remain another significant deficit for the year, so that maybe is a reason why silver might keep going up as well. But that is from the Silver Institute, so they might be slightly.
yeah, sorry, I didn't look at silver. I completely ignored because I've never traded it in my life. I trade gold all the time, and I've just got something against silver that makes me scared.
Well, it's all that JP Morgan Hunt Brothers stuff from the 70s, isn't it? It's trying to corner the market, wasn't it? They bought
What's that story?
The Hunt Brothers, they tried to corner silver and by buying it all up, and needless to say, it ended in tears. But it's a great story.
And UK traders or
They were US traders, I think it was,
Right.
from about 50 years ago.
And did they get close to doing it?
I think they came very close, yeah. But it all ended in tears. So it's a good story for the afternoon to read up on.
Yeah, sounds like a Netflix movie.
I don't think it is, though. Maybe you should pitch it.
That'd be a good one. Or at least maybe we can. Are they still alive?
No, I don't think so.
No. We are looking for potential guests for podcasts. And I think Nick Leeson.
Went to my school.
Really?
Yes, he went to same senior school as me.
Maybe we can get a discount. So Nick Leeson's about £5,000
Right.
to get in for an after dinner speech.
Okay.
So how about you use that
Persuade
contact
him as an
to get
OP.
a discount?
Okay, yeah.
So there you go. If you see Nick Leeson on our show at
In
some
fact, he
point-
went to the same primary school as I did as well. So there you go. Watford boy made good.
No way.
Yes.
And so,
We don't really talk about him as an old boy at the school, though.
Well, yeah, funny
I
that.
think he's on the Wikipedia page.
This is the problem, is that you have people obviously like Jordan Belfort and Nick that ended up in jail and being guilty, you know, of fraud or, you know, whatever. And they've both done time. They've both been in jail.
Done the prison time. Yeah.
So some people, if you talk about them on social media, they hate the fact that you are giving them airtime. But what an amazing story to learn from, right? Because that guy went through absolute hell, mental torture of what he did. And it wasn't, he didn't plan it to be, you know, what it was eventually. No. He just got himself into a massive
he carried
mess.
on digging and just couldn't get out.
Yeah.
Was convinced they could get away with it. Or make it right. I think it's the way to look at it, not to defend it, but he thought he could make it right. Or if I just trade even bigger size or whatever, I'll get back to where I was, which is the classic gambler's fallacy.
And that's why I think it'd be really good on a podcast, because you really hit it home to people. Never trade a mistake.
Yeah.
As soon as you make a mistake, get that thing
Never
off.
reinforce failure. Yeah, it's the classic thing.
Yeah. And I've been there. It was drummed into me at Credit Suisse because the guy...
There's nothing ever went on at Credit Suisse.
No, there was never any errors there, was there?
They're all fine. What happened to them? Okay.
I mean, jeez. Yeah.
Herbert Hunt died May 2024 at 95.
Ah, shame.
So there you
now,
go.
getting a 95-year-old on a podcast, that would be... That'd be very watchable. We took a wonderful, Chris, if you are watching, a very good morning. We took an 86-year-old gent out to lunch a couple of weeks ago, me and Ronnie. And the stories that he had were absolutely incredible. You would have loved it. You have to come along next time. He was, oh, Fred's just shouting to me, footsie watch. He was born in 39.
Okay.
And he remembers the bombs dropping as he was a child, not because he was being targeted, but because they were shedding their loads before they left to go back over the channel.
Oh, okay.
He was in Norfolk at the time.
Right,
there we go. Let's get on the 1 minute chart and watch this.
Oh.
It really wants to go higher, doesn't it? Let's even go 10 seconds.
We just play some gentle music in the background when we watch this, and just.
What kind of music do you want? It's got to be
something exciting. Or a countdown clock, maybe. That would be just play it over and over again. Probably that. Trademark. There we go. Copyright, rather.
Right. What do we want? We want to see 8,700, doesn't it?
Mm-hmm. So that's because it. Yeah, record high.
Right, we're not going to break until this thing trades 8,700.
Nobody's going anywhere.
Right? Nobody's going anywhere. Sit down, monkey man. Get back down on that seat. Is this going to trade?
Talk amongst yourselves, everybody.
It's gone back down to 8. Come on.
You know what they say about watched pots never boil?
Yeah.
So there's no point watching it. It'll do it when you're not looking.
I
want to break free.
You wouldn't get this on CNBC, would you? Hey? I'll tell you what, let's go to a break and we'll see how it is. I promise you, if it does it during the break, we're going to cut the break and come straight back in. But get that kettle on.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered, live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
I'm Ben Hemmington and I head up the sustainability function here at IG Group. IG Group pledges 1% of its annual profits and directs this to community initiatives. This is a pretty significant amount of money. We're talking several million each year. And I used to work in the charity sector, so I have first-hand experience of just how much of an impact this money can actually have if it's used wisely. In particular, we are focusing on empowerment through education. So looking to see how we can empower members of our community that are disadvantaged in different ways by providing access to quality education. It's an area of work that we're really proud of and that we're having a really excellent impact in. On the IG Group website, we have a download centre which has got lots of information about our sustainability function. Here you can find out more about our product governance, about responsible investment. We have documents around our diversity and inclusion, including a D&I statement, KPIs and targets, as well as our progress against these. You can also find a number of documents relating to how we manage our environmental impact. And then also on that download centre, you can find our community impact report that talks all about our Brighter Future Fund and the impact that it's having.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
So we are looking at 8,697. We're almost there. Coming in to confirm and send. Now, we would like your questions. This is a nice little Q&A session today with Chris Beecham. So any questions you have on strategy, of course, Chris is our chief market strategist here at IG. So yeah, any questions on markets, the economy, on history, on expectations for Bank of England. Chris is our in-house expert. So drop them into the chat room, and yeah, we'll go on. My first question for you today, Chris.
Mm-hmm.
When we're seeing all-time highs like this on the FTSE and continually in the US, what kind of assumptions are we having to make at the moment fundamentally for this to keep on going?
Well, stock prices are a function of earnings growth, ultimately. That's what drives them, isn't it? We know this is why you buy stocks in the first place, because you want earnings and you want the earnings to improve. So you are assuming a fairly rosy forecast. I think if you look at what we're saying for the S&P for earnings season, we're expecting earnings growth Q4 year over year to be about just shy of 12%.
Mm-hmm.
That's the estimated.
Okay.
And we're roughly, at the moment, it's about 13.2. And if that will be the highest since 2021 if we get that. So look at US stocks.
That's so far in earnings season in the US.
Far. Yeah, that's the blended from the fact set. So
okay,
you're asking a lot of stocks at the moment, I think, when there are so many things to worry about.
Is there always something to worry
That's
about?
the thing. Markets climb a wall of worry, don't they? That's the old cliche. They climb a wall of worry and they descend the slope of hope, which is my favourite line.
Slope of hope.
Slope of hope. So that's the thing when people say, and companies say this in their RNSs, don't they? Oh, next year expect to be more uncertain than last year. Why? Did you have a crystal ball last year that you didn't have this year?
It's kind of like people your age always say the good old days, and they think the good old days were better.
Cheeky. I'm not coming on again if this is how you can behave. I don't get this from Angeline. Yes.
Yeah, it's tricky, isn't it? Because We had a great discussion last night. R6 Senna, perfect time with our question as well. We were chatting about buying puts as protection on your holdings, on your investments. And R6 Senna was saying, I've lost so much money from buying S&P puts all the way up, and they ran out on the 20th of January. Why should I
bother? Yeah.
Why should I bother? Or are there any alternative ways to do it? Now, my initial reaction was, I've heard that before, people hating wasting money, and it was in 2017, late 17, and we went another 3 weeks, and the market dropped 10% in a day.
Yeah. So that's always the way, and that's the kind of there's as an insurance, with the puts, you're saying, okay, if it does go down, say 10% in a quarter, then I do all right, and if it doesn't, then it's just money I've spent and I've limited the risk. So I think that I still think that makes sense. You have to just say, well, most of the time it will just keep going up, and that's the key thing. Markets go up most of the time. Goldman Sachs' stat is that markets go up 2 out of every 3 days. And what we also
Not necessarily intraday.
No.
That's the interesting thing. A lot of the time it's overnight.
Yeah, but exactly. If you'd hold the stat, if you bought the S&P at the open, sold at the close, you'd be flat. But if you'd bought it at the close and sold at the open, you'd be up. It's something ridiculous, isn't it? Yeah.
Which is insane. Yeah.
And then I said it. But we also know that new highs tend to beget new highs because you're dealing with momentum in the stock market. The whole thing about in the short run, it's a voting machine. In the long run, it's a weighing machine. I got that the right way around, didn't I?
Tell us that one again.
In the short run, this Buffett's line. In the short run, the market is a voting machine. In the long run, it's a weighing machine. And the idea that momentum in the short term carries things forward, but over the longer term, quality will out, essentially, which is his line, and it's obviously served him very, very well.
So this all tells me to buy more FTSE.
To just go in blindly now. Exactly. So, but you shouldn't obviously stand in the way of it, but you should, because occasionally something will come along like July of last year where the brown stuff hits the big spinny thing. Yeah. And then you do have these moments. But I suppose that's the payoff for all the other times when you've done it that quarter and that quarter and that quarter and it hadn't worked. So,
yeah, Monkey Man absolutely saying that the trend is your friend.
Yes.
So what do you do at this point? If we look at the, I don't want to come off the FTSE chart here, but I'm going to very quickly to have a look at the S&P. What do you do when you've got a weekly chart like this?
Right.
From October 22, and we've seen it move from 3,600 to 6,000. And you've never really had a chance for your put to make money.
No.
Maybe in October 23, or maybe April 24, and definitely August. But not, what do you do if you're should not?
Well, that's the point of insurance. It's like saying, well, I shouldn't have insurance on my house because it hasn't burned down yet. So I'm losing money. Exactly. I'm losing money, so I shouldn't have insurance. But then, God forbid, something happens.
But it's more than that, isn't it? It's because we're at such high valuations. It's like saying, I'm not putting insurance on my house because it hasn't burnt down, but we're getting the hottest January ever, and you're seeing stories like this in the FT. Maybe it is time to.
Well, yeah, but how does that bear on your portfolio right now?
Sorry, that was still with a house fire.
Oh,
reference.
Sorry, I'm sorry. Sorry, the metaphor is still there. Sorry,
the metaphor and was bringing.
Okay, fair enough. Yeah. About home valuation in the US yesterday, weren't they? That they're being really hit hard because of climate change.
Yeah.
Because suddenly it's coming into focus, I'm sure. But there's a really good chart. I've just sent it to you on your Teams about total short interest in S&P 500 stocks. It's a 6-year high, which Okay,
so there's. Yeah.
If you get maybe a bit of a sell-off, there's quite a lot of short covering that might go on there because people are buying back because they're short, but the market keeps going up. So you can argue there's plenty of fuel there for things to keep going.
But what about investors as a whole? Is it a time to think about moving from equities into a higher bond part of your portfolio.
Yeah, I mean, it's only a month or so since you and I were talking about the end of the year and stocks have done so well, can they keep going? So you've already had, obviously, that dose of volatility. And so, actually, someone said yesterday, if you're short a stock and it doesn't go down on bad news, this was someone's line when they were starting out investment banking, and their boss said, if you're short a stock and it doesn't go down on bad news, you have to get out because there's only one way it's going to go.
That is the...
You had DeepSeek and you had tariffs on Monday, and within 24 hours of both, it kind of went away again.
It did. It did, within 24 hours. So that makes me more worried, and it makes you more confident.
Well, it doesn't make me more. It's just a sort of a tell there, isn't it? Yes, things look very richly valued. The Dow's at 45k. Things have gone really, really well for stocks. And that was the lesson of last year, that nothing really bothered them particularly. And it certainly didn't spread in terms of contagion.
Yeah.
It's really hard, I think. I understand the point. You look at it, it's gone up loads. Surely something has to happen. But just because it's been a while since the last big sell-off doesn't mean one is automatically due. These things don't work on a
but the valuation tells me that, not the fact it's gone up a lot.
I think you're right to say that, because if something does go wrong or something hits that we don't know what it is, then I think there could be quite a bit of a nasty moment, because things are so priced for good news.
So if you don't want to waste money on puts anymore, even though it might be the best time to buy puts, is it time to lighten up on the...
I think that's the argument. You're not necessarily you don't have to go long or short. You could do nothing, or you could shift away from stocks with the proviso that obviously if the Dow, say, went to 50 this year, if, say, it goes another 5,000 points, it's not very hard. It's, 11%, and you're not in it. How are you going to feel?
Or you shift out of something expensive into something cheap, like the FTSE 100.
Yeah, exactly. Again, the guy that founded modern portfolio theory, I can't think of his name, but he comes up with this really clever idea about how you create the best balanced portfolio. What did he do? He put half his money in bonds and half his money in stocks, because he said, if one goes up a lot, if I put all my money in stocks and they go down a lot, how will I feel? And vice versa. So he just split the half, and that was it.
Yeah, and that is the play, isn't it? 60-40, 55,
It's
45.
relative attractiveness, isn't it? Yeah, if you think bonds or whatever look cheap at these levels, maybe they're not priced for such good news in the way that stocks are. So I take your argument entirely, really, about difficulties in earnings.
How will the rate cut from the Bank of England affect UK banks, is the question from the chat.
Well, I think, as we were saying earlier, you want the Bank of England to be alert to economic weakness. And so if you are cutting rates, that's clearly going to hit things like net interest margins for banks, isn't it? It's going to mean they make less money. So in one sense, not great. But in the other sense, on the other hand, hello, I'm the analyst with two hands, as ever, it's just good because it keeps the economy going, because it means more people like to buy houses. So if it boosts activity in the mortgage market, if you're long Lloyds, they're such a big player in the market, that is ultimately a good thing, in inverted commas. So it has a fantastic run for UK banks last year. NatWest was one of the best performers in the entire index.
And Barclays.
Yeah, so fantastic.
If you call
run.
Barclays the same, I'm not sure it's quite
it's
domestic.
It's a bank, it does the same thing.
Yeah.
But yeah, so they've done really, really well. But if you've got a Bank of England that's more activist...
Oh, let's cut to the chart, people. 8,700 bids, we're there. 8,701.
Briefly, there you go.
Wow. I'm back below it. Cut the music. Cut below it. We're below it again.
Cancel it again. Put the balloons away.
Quite incredible. Absolutely. A bit of Lighthouse family with high there.
Could you get producer Fred to go and buy some English champagne? That would.
Some English champagne.
Yeah, some English.
How dare you?
It's the same soil. It's the same soil as Northern France. Go make him buy some for that record high.
Monsieur Bouchon. Right. How many years since the Great Depression?
Well, it's 95, isn't it? Now 94 years since. That's a great book, isn't it? J.K. Galbraith's book on the Great Depression. It's only about that thick, so you can read it in an afternoon.
Right.
Really, really good book.
That must be on your bookshelf, is it?
It is, yes.
Or you can bring it in.
The Great Crash, yes.
That could be one that you bring in and sign, and we could have it as a competition winner.
I'm not giving away books from my library. I'm not doing that. My wife would be delighted, but I'm not doing that.
Is man the solitary hawk today on the BOE committee?
Oh, Yes, I think so.
Is it 8-1?
It's 8-1 is the expectation. So again, it's because with Bank of England and the Fed and ECB, it's not really about what they will do now; it's how the voting plays out. But I think you're expecting a fairly solid dovish caucus, aren't we? What's the collective for a group of doves? What's the collective noun? Somebody must know out there. You're all smart. Tell me. Collective noun for doves. Don't make me Google it.
Informa. Informa is on the verge of a 5-year high and only about 2% off an all-time high. What do you think, Chris? Do you know much
Informa.
about good old Informa?
It's one of those names. I'm sorry to say this about Informa. It's one of those names that you just see and then you don't really talk about.
It's true, isn't it?
What does it do? Again, he's Googling furiously.
Oh, and why is the chart so bad?
Publishing business intelligence exhibitions. Okay.
That's a very interesting chart, actually. Thank you for highlighting that one, Steve, because it does look interesting. And this is the kind of...
That's a fantastic run since 2020. That's almost the anti-pandemic trade, isn't it? Because the end of 2020, the stocks bottomed out. And it's not people are going to stay at home. It's people are back out again.
Yeah.
Going to business exhibitions, clearly.
So this in Relics. Yeah.
Yeah.
And actually, we'll look at Relics chart in a minute just to compare them. But yeah, 885 is the high from July last year. We're going to help you out, Chris. We're going to give you a look at tip ranks. We've got an outperform 8 out of 10.
Okay.
And 7 buy ratings with a 10.22 target.
Okay, it's interesting. And Informa, over the last 5 years, has outperformed Peloton. It's up 9%. It's up 10% versus a 72% decline for Peloton. So there you go. So that's your sort of anti-pandemic trade. If I'd said to you 5 years ago, you should have sold Peloton, well, you'd have taken a huge loss on Peloton because it went up 500%. But imagine if you'd bought it when Peloton peaked and that kind of thing. But Informa, good name.
Yeah, Informa, 10.22, and all the target prices recently.
38 times earnings.
Barclays, £10 target. Berenberg, 10.70. Carl Murdoch-Smith, very good analyst there over at Berenberg as well. Morgan Stanley, £10. Yeah, I like that. That's
38 times earnings, though. That's quite expensive.
38 times earnings.
Yeah, again, that's Google Finance.
Is
so
that
I'm just quickly Googling?
Okay, so that's yeah, normalized 21.
Okay,
I'm guessing that
even
is the forward.
Cheap, 2% yield. Mind you, the momentum's there. So in the breakout, it's always a good sign.
Steve, thank you very much for highlighting one. I love when we get new ideas like that, especially UK stocks on the morning when the FTSE is at new all-time highs, because I need some new ideas.
But can you give it to us next time before it goes up? That would be appreciated.
Well, he's giving you one that's a £10 target, and it's only at £8.80.
Oh, target prices, brokers.
You analysts. There we go. We have up, and away. We've absolutely smashed through 8,700. We had another a trader at the Tasty workshop last night. He was on the live floor trading the 8,000, sort of trading the FTSE 100 back in the
down
late
in this
90s.
building.
In this building, yeah, and he says it was just really, it was a lot of fun.
There's a film on YouTube of the late Queen opening the live floor for about 96, is it, or earlier?
Yes, or so.
Yeah, but it's to look at how the city changed, because I think it's a good metaphor, because that was the live floor, and now it's Deliveroo. You want a metaphor for the city? Yeah. There it is in front of you. Yeah,
that's the present and History England. Who else
for some reason, pay for an office in the middle of London, that's going to be expensive. Yeah.
Good. Right, we're almost out of time for the questions. Galbraith Julian here.
Yes.
Galbraith believed that the crash was caused by rampant speculation and the belief by investors that they could become rich without work.
Well, it's good that doesn't happen now, isn't it, really? But
yeah, people would never think that kind of thing.
Well, that happens all the time. But yes, so there was that famous, who was it that said in 28 or something, stock prices have reached a permanently high plateau? It was the infamous line from about 1928.
Really?
Was it? Somebody, again.
But, a bevy of doves. Thank you, Neil.
Thank you.
A bevy of doves. I wouldn't have guessed
Richard Fisher said that. Irving Fisher, the economist Irving Fisher, stock prices have reached what looks like a permanently high plateau. And then it all went wrong.
There's a whole heap of. Well, I think they've cottoned on to that you're a history buff, Chris.
Yeah, sorry. I try and suppress it, but it just keeps bursting out.
Did you do a thesis for your degree?
Yes, my degree was war studies, so mine was the Peloponnesian War of ancient Greece. Was my dissertation.
So if anybody is struggling with sleep at the moment, can we find it online?
No, because it was only my BA, so you won't find it online, thankfully. It wasn't very good. But
And was it a first?
no, it was an upper second.
Oh, Chris Beecham outed on air.
I know.
Wonderful. Right, we are running out of time soon, but we're going to cut to a break. Then we've got Angeline coming in with Will McCreary. So we're excited to have that. But we are going to play you out at this moment in time with the graph of the FTSE, intraday, and smashing ahead.
There she goes.
Let's just watch this beautiful thing at work.
Look at her go. I've never seen you look so happy.
I've waited all last year, waited for this moment, and there it is. Something we can be proud of in this country at last.
Yes, despite Rachel Reeves' best efforts. There's the FTSE 100 record high.
So have a quick look at how the stocks are actually forcing this thing out. It's AstraZeneca up 5% now. Anglo's up 5%.
Oh.
Antofagasta up 4%. Look at this. Oh, is it the NASDAQ of FTSE? Prudential up 2%. Where's if Vodafone is down on the day, I am going to cry. Where is Vodafone? How far down do I have to go before we find it? Oh.
I think keep going. I think you
Up 0.8. Come on, even Vodafone's at the party. And SSE as well. Right, I'm off to check my pension. We'll see you after the break.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered. Live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
To find a list of all your open trades, click on Positions in the sidebar menu on the left. Here, you'll be able to see key information about each of your trades, including the market name, the size of your position, the opening price, the stop order you chose, and your limit order. You'll also be able to see your profit and loss. Positions are normally sorted in descending order of your latest trades. To change how your positions are listed, you can filter your view by clicking on your preferred factor, like which trades are making you the most money, by selecting profit and loss. You can edit your limit order or stop order by clicking on the figure and entering your desired number. Lastly, You can close your open trades by clicking on the Close button next to the relevant trade.
I'm Ben Hemmington and I head up the sustainability function here at IG Group. IG Group pledges 1% of its annual profits and directs this to community initiatives. This is a pretty significant amount of money. We're talking several million each year. And I used to work in the charity sector, so I have first-hand experience of just how much of an impact this money can actually have if it's used wisely. In particular, we are focusing on empowerment through education, so looking to see how we can empower members of our community that are disadvantaged in different ways by providing access to quality education. It's an area of work that we're really proud of and that we're having a really excellent impact in. On the IG Group website, we have a download centre which has got lots of information about our sustainability function. Here you can find out more about our product governance, about responsible investments. We have documents around our diversity and inclusion, including a D&I statement, KPIs and targets, as well as our progress against these. You can also find a number of documents relating to how we manage our environmental impact. And then also on that download centre you can find our community impact report that talks all about our Brighter Future Fund and the impact that it's having.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
Welcome back, trader friends. What an exciting day we've had. The FTSE hitting all-time highs, and we got Will McCreary here to raise the roof with us. Such an amazing move. The question is, can it stay higher? What do you think?
Yeah, no, I think it still has some room to go. I think, as you can tell, it's a very bullish sort of market on the FTSE, and I think people are optimistic that it's going to keep going.
Yeah, and you know, the interesting thing too is, you know, this is like the comeback kid of 2024, right? I'm sure that across the room there, lots of people have been saying, you know, we're seeing higher relative value. The FTSE, you know, it's long. We've long been waiting for this. Everyone calling the rotation as well from relatively more expensive US stocks into the likes of the FTSE.
Yeah,
we've already seen the DAX, obviously, but today it's the time of the FTSE, and on Bank of England Day as well.
Exactly. Yeah, which is again a very sort of big thing to announce today. They've announced today. Yeah, looking to 97% probability they're going to reduce the rates to 4.5%, which is you know, obviously great for the economy. Hopefully get rid of that sticky inflation. Not too sure it will. What are your thoughts on that?
I think out of all the central banks,
yeah,
the Bank of England has the most leeway to make a bigger cut.
Yeah.
Yeah, they've got sticky inflation. We've got Trump creating big waves out there, and to me that's all kind of like inflationary.
Yeah.
You've got Rachel Reeves, you know, trying to kickstart this whole economy.
Yeah.
But at the same time holding on to the fiscal guardrails that was promised. But really, what the UK economy needs is a rocket up the.
I do agree with that completely.
Then there's the whole kind of April companies getting hit by the whole NI, right? And
exactly,
many companies
inflation, exactly, yeah.
have already started cutting to try and anticipate this hole that they have to fill.
Exactly.
What's the mood like on the floor? I mean, ahead of the BOE?
Yeah, I mean, obviously, a lot of people talking about it. A lot of clients already sort of phoning in, trying to get our opinion on it as premium client managers. Yeah, we've basically said exactly that. Yeah, probability is going to get cut, and then just sort of not advising at all, but just sort of mentioning where they can sort of benefit from this.
Right, we've got some very, very good questions coming through from some of our viewers out there. I think Arsax asking, hi Arsax, good to see you again, and I'm glad you made it for the Tasty Beginners course. Hope to see you again soon. I couldn't make it last night, unfortunately, but I heard it was fantastic. We even have treats from last night's. Rich kept some treats for me. There you go. Arsax asking, how will the rate cut from the Bank of England, or indeed rate cuts, right, this year, affect UK banks?
Well, it just means that UK banks will be able to sort of borrow more cash, which will obviously allow sort of for more business to get done. So hopefully, there's going to be some more sort of cash flow between, being put into the economy, which should have a benefit, as I say. And less people, although less people are going to be sort of saving their money with the banks, because interest rates will obviously become lower. So it'll be interesting to see what happens.
Yeah, at the same time as well, financial stocks, depending on how far rates fall, they could struggle because they're in a tricky situation. They won't be able to, for example, upgrade their net interest income. Lower interest rates, as you mentioned, cut banks' net interest income. This is a key metric for the sector. Also, not forgetting some of the other sectors, Saxena, that could be also affected. You want to watch house builders. Now, house builders are close to my heart here because I have invested in property before, and I know that the market, I've got 4 mortgages for my sins.
Oh yeah, wow.
One is about to come to an end, thank goodness. But
There's rates down then.
Yeah. And I know across the country, not just in Kent, but Hertfordshire and many other places, not so much Milton Keynes. That's a chink of light because of the whole Oxford-Cambridge connection.
Okay.
But, have a close look because, the Taylor Wimpey's, the Barrett Redrose, they have really, really been kicked. Just showing you my chart here. And if I zoom out to my daily chart, you'll see what I mean. And you'll see this trend across the board, but they are starting to tick higher now. Yeah, they are starting to come back. So if you are looking to gain exposure, to benefit from cuts in UK interest rates, then have a look at house builders. For those that might prosper as well with cuts in interest rates, also hospitality could benefit, and consumer discretionary.
Yeah, sure, yeah.
Exactly, retail. Speaking of retail, we've had quite a lot of news out of the UK so far. We had some questions earlier about not just BOE, but also some of the names that have come out today, like Watches of Switzerland, we have AstraZeneca in the drug sector, Anglo, ArcelorMittal. Which ones stand out to you?
Well, the AstraZeneca one is obviously really interesting. I think the last time I checked, it was up sort of 2%. But they're, just from doing some research into it, they're sort of oncology, which is to do with the sort of research of cancer, has really sort of stood out for them. They've had a sort of 24% rise in revenue on that, and has really sort of stood out in terms of their competitors on this as well. So this has been the sort of focus for why AstraZeneca has had a sort of big uptick, well, good results, sorry.
It's strong, isn't it? I mean, look at that.
Sure.
That is, that's a very, very good pop there, 4.8%, which, brings us up to levels not seen since October last year. Top gainer on the FTSE 100 as well. I'm very happy. I am long AstraZeneca.
Nice.
And I like the fact, trader friends, that they have managed to come away from the relying on the COVID vaccine glow.
Yeah.
And really shone on the oncology front as well. Analysts out there, external analysts also expecting revenues to rise by high single-digit percentage earnings growth to low double-digit percentage. So that's pretty decent.
Yeah, I mean, I saw that their profit before tax was 80% higher than it was this time last year in the same quarter, which is like crazy.
Yeah, it is incredible. I was listening to Chris talk about this earlier, and now wish, with hindsight, that I put more money into AstraZeneca. GlaxoSmithKline also, let's have a look, because they always, you know, tend to go in tandem. Also, a bit of a lift there, not by much, so I think it's already had its uplift yesterday, because it was also out with some good news, and also they came out with a comment saying that they'll be fine. The CEO says, "Don't worry, guys. We'll be okay, you know, dealing with these tariffs." So there was a lot of calm, you know, mood music coming out of AstraZeneca and Bank of England and GlaxoSmithKline. Anglo, let's go over to the miners. Anglo, very interesting because it's also up a huge amount, 4.6%.
Yeah. Well, Anglo, they just got such a strong copper component, don't they? Where obviously copper's massive right now in terms of AI, making semiconductor, or involved in the sort of semiconductor space. So it's such a big need, copper, or has been for the last sort of year. And that's been obviously a massive part of their sort of recent results in the last, again, year or 2 years.
Yeah, and I think that is why, you know, it still sees this share reaction, you know, despite the fact that it's posted a 6% fall in copper production. You know, the fact that even though it had a fall in copper production, it's got multi-use, right? Like you said, the EVs, infrastructure, renewables, and a lot of electronics, which data centers need a lot of copper. And on my street, if you leave anything glinty or even remotely looking like copper, it just...
No, exactly.
It's insane. We cut a copper tub in half, thinking no one, and we had to carry the next bit out. By the time we came out with the second half, first half had gone.
Really?
It's madness. So that is Anglo. Also, what's interesting about Anglo, it's looking to spin off De Beers. So keep that one in view, trader friends. ArcelorMittal, let's have a look at that as well. Whilst we're on this, ArcelorMittal. Have we got that on the system? Here we are. All in one word. Up 4.5% as well. Now, you know, it's not difficult to see. I wonder, Will, if this is also in tandem with the world's biggest resource shopper coming back from Chinese New Year holidays. What do you think?
Yeah, no, it definitely could be. And yeah, I mean, last time I was on the show with you, we spoke about that, and you educated me on the sort of potential market movers when Chinese New Year sort of happens. And as you said, it relates to giving gifts to your friends and family.
Monkey Man, coming forth as well and chiming in, saying that he came across a quote the other day: "Pessimists sound smart, optimists make money."
Like it.
I like it. I like it. Hopefully pragmatic optimists as
like
well. And Monkey Man asking, how's your nuclear watch list looking like? Well, let's have a look, shall we? So I have very handily here. It's not just nuclear, Monkey Man and Trader Friends. It's also a wide diversification of energy linked to power and data centers. So the GE Renova, Constellation Energy Corporation, your Vistra Energy as well.
I'm all over this. Vistra and Constellation.
Oklo, your Nano Nuclear Energy, NuScale. I will let you know when the cash session opens. But, you know, it's a really interesting space, given we had those stellar numbers from Palantir.
Yeah, no, exactly.
I mean, you know, that just reiterates the...
100%. And like, you know, these got hit really hard. I mean, trust me, I was an absolute victim of that. He's getting hit. Was it two weeks ago, last week? And everyone's saying, oh yeah, you know, maybe they don't have a place with all the sort of cheaper AI, but you still need the energy, and more companies with the cheaper AI are going to be making more AI. Therefore, the energy will just increase So I'm still I'm incredibly bullish on those stocks and have them in my portfolio.
Let's take a look. I am bullish on Palantir as well, and I have a long position on Palantir. Let's take a look at the total revenue and look at that rise. I mean, quarter on quarter, you can't knock that. And the expectation is that it's still going to grow as well. And I just think that, power begets power, even in the renewable space, right?
Yep.
You're going to need. We went from a situation where we had no mobile phones to a mobile phone. Then everyone thought, oh, that's enough screens. Now everyone's got 2 mobile phones and 4 laptops.
Yeah.
And certainly here, Will and I feel like we're in the sauna because we are surrounded by screens and laptops as well, which brings me to my all sessions list, which I'm going to handily bring up so that we are ready, and it is super zoomed in for all of you out there. It's feeling like a bit up. Here we go. We are off to the races. Right, so do you want to take us through the winners list first?
Yeah, so at the very top is Plug Power, and it's up 2.97%. Clean Spark up a solid 2.23%. Tilray again 2.8%, I think. Super Microcomputers 2.67. Novo Nordisk continues its rise on 2.16.
Yeah, and ahead of Eli Lilly's results as well, which will be very interesting because they both compete in the same space for obesity and diabetes drugs. Let's have a look at the losers then. We've got, flicking around quite a bit today. We've got Qualcomm down 4%. This is after its earnings, of course. ASML also down there. Tesla down ever so slightly, but it's really a bid up day, isn't it?
Yeah, well, the Tesla is interesting because, as I've messaged you before, the Chinese electronic companies like BYD is up 18% today. So it probably has a correlation to that.
Do you know I just saw several BYDs at the weekend on UK streets? Yeah, first time.
I've not seen one yet.
First time ever. Trader friends, if you've driven a BYD, please let me know. Please let me know because I would like to drive one. I haven't yet had the chance. So all over Southeast Asia, very common. But here, I was surprised last weekend was the first time. Qualcomm, let's get you across that because it is down more than 4% there. Come off slightly since Will has been speaking. Maybe it's your magic, your dulcet tones. Sales beat estimates, right? But the thing that's dragging this stock down is its licensing forecast. Qualcomm, is this one that your clients trade a lot, or is it one that it's not very on your books really with your clients?
Yeah, I mean, personally, I've not come across this stock too much. So I would say my clients don't have a huge amount to do with it. But I mean, just looking at it's had a
but it's come down.
Of that?
Yeah, that's the 1 minute. But in terms of daily, it's it's come down.
Yeah.
But also the other interesting thing, I mean, it's slowly giving back those losses. Qualcomm, really, the patent licensing business, everything just went bosh. The mood, everyone left the room when it said expectations for revenue flat.
Oh yeah, really? Okay.
Which is not great when that's like the crown jewel.
Exactly.
In its business, right? It's patent licensing. Also, the other thing that was key for those of you that trade Qualcomm is last year they stopped selling chips to Huawei, even though they did still retain the license agreement with Huawei, but they stopped selling chips, and this was also seen as a negative. Right, so that's Qualcomm. Let's have a look at Ford as well, because Ford is one that also had earnings after the market close. So I'm going to...
They beat their estimates, Ford, but the stock, last time I checked, was down.
Yep.
And this, I believe, is from the CEO of Ford saying that they're going to really struggle with the tariffs put on Mexico and Canada. Like they're going to miss out on billions dollars of revenue, and I believe that's surely the reason why their stock has gone down.
Ford down 4.3%. They're real, really struggling there, and actually it's punched through that resistance point at around 953. It's come back up slightly, but really this is a chart to me that is in for perhaps potentially more pain if it continues to move.
Sure.
Right below that level. Reverse. The other thing is the EVs. I mean, it's not just Ford, but those of you that trade this space, it is painful right now, because if you're like the Fords and even and the Japanese car makers, European car makers, not to be discounted from the pain as well. You kind of squeeze on both sides, aren't you?
100%, yeah.
On the one end, you've got rising losses, and now this not great outlook for EVs. Ford itself is now looking at $5.5 billion in losses on electric vehicles.
Yeah.
Software operations as well, not doing well. And then on the other hand, all these car makers, I mean, what kind of car do you drive?
Oh, I've just got the car I had when I was 18. I'm so happy with it. 10 years down, then I would.
Nice.
12 years down to Peugeot.
And what does it take? What is its fuel?
It's 1.2, petrol. But I mean, it rattles when it gets to 80 miles per hour, sort of thing. But I love it.
It goes like a bomb.
Yeah, I wish.
So, the thing is, every time I meet someone, I ask them, and increasingly we're seeing this kind of like move back, or people kind of thinking, should I move back to petrol, to diesel? So on the other hand, with these car stocks, they're squeezed on the other side as well now with, of course, the Trump drill baby drill rhetoric, keeping fuel prices low. We all know that, oil prices have an impact on R&D, on EVs. So it's really difficult, and probably why the whole Nissan Honda nightmare is playing out right now.
Yeah, no, 100%. I think people are spending less money on cars at the moment because everything else is so expensive. And with congestion charges and things like that, there's less money to be allocated to cars, especially among my sort of age group. I'm 30. I live in London. People really, I can't remember the last time one of my friends bought one of their cars. Bought a new car. So I definitely think that's a trend right now as well.
Yeah.
In the car space.
Yeah. Trader friends, share your thoughts on the comments page here. Whack it down. What do you drive? What flavor? No judgment. Promise, no judgment. I can share mine too. And he shared his, bomber Peugeot. And let us know what you drive, because, this is an interesting space. We have to go to break soon, but we'll be back after this. Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered, live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
I'm Ben Hemmington, and I head up the sustainability function here at IG Group. IG Group pledges 1% of its annual profits and directs this to community initiatives. This is a pretty significant amount of money. We're talking several million each year. And I used to work in the charity sector, so I have first-hand experience of just how much of an impact this money can actually have if it's used wisely. In particular, we are focusing on empowerment through education, so looking to see how we can empower members of our community that are disadvantaged in different ways by providing access to quality education. It's an area of work that we're really proud of and that we're having a really excellent impact in. On the IG Group website, we have a download centre which has got lots of information about our sustainability function. Here you can find out more about our product governance, about responsible investments. We have documents around our diversity and inclusion, including a D&I statement, KPIs and targets, as well as our progress against these. You can also find a number of documents relating to how we manage our environmental impact. And then also on that download centre you can find our community impact report that talks all about our Brighter Future Fund and the impact that it's having.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Hey, 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 trader friends, welcome back to the show. We're live from the trade desk with Will McCreary.
Hello everyone, how you doing?
Hey, so we've had EVs, we talked about drugs, AstraZeneca. We had questions earlier as well from the British Indian. Thank you so much for asking about Diageo. We'll get to that quite soon. Colin Lynn, loving the segment, asking whether we can bring Colin on next. Of course, just send us a message on ask@ig.com to myself, and we'll see if we can work something out. But yes, thank you for joining. I'm glad that you enjoy the show. Let's start off with something that didn't have the earnings yesterday, but the day before.
Yeah.
So it's kind of shaken out, but still very fascinating. And that is Disney. We've got quite a few people here who trade Disney. It's not doing much during all sessions, but it did fall the following session.
Yeah.
So, I mean, we're in a time, I can't believe I'm saying this, but we're talking about sports streaming.
Yeah, exactly.
Affecting the House of Mouse.
I know. Yeah, I mean, it's the big thing right now, isn't it? Sports streaming is massive. You know, the competitors like Amazon and Netflix are all getting involved in it. I mean, especially Netflix. Like, you know, obviously their results the last week were huge on the back of, well, obviously like strong results elsewhere, but they did the boxing with Tyson, Mike Tyson and Jake Paul. And you know, Disney,
which was shocking.
Yeah, it was shocking. It's a real letdown. But I think that now the brothers are about to fight each other, Jake Paul and Logan Paul. So I assume that's with Netflix as well. But yeah, Disney obviously have this branch of ESPN. So to do with sort of streaming sport again, and obviously they did beat their results yesterday, but apparently that's a massive sort of help or boost from Moana 2, which
was awful.
Yeah, I've not yet seen it, but I'm the screams of a sort of hungover Sunday sort of watching. But if it is awful, maybe I avoid it.
It just felt like I got dragged there because you know it was a rainy, wet. Cold, wintry day.
Proper cinema day.
Yeah, I was weak and probably hungry.
Sure.
And got dragged to this thing and probably got enticed by Prudential's. If you have an account or you have your pension Prudential, they do this thing where you get like complimentary points which you can use a certain way.
Yeah, definitely.
I'm sure all of them have it. Like Fidelity's got one too. There's others that kind of like make you link it to your app or your phone or your watch, and then if you do a number of steps a day, I don't know why they do this, but they give you either a coupon for Starbucks, why you would do that, because you've just done all this exercise, or go to the cinema where you're going to eat lots of popcorn. Trader friends, give me your ideas. It's a closed loop business, isn't it? Very, very smart, but I got dragged there. It was just like squeezing, right?
100%.
Yet another
They all are. These Hollywood films, they really are.
But
Yeah.
Disney, I mean, the fact that it's content sales licensing, let's whack up this chart for our trader friends, you know, up 34%. It did well. Parks and experiences, otherwise known as experiences, now they keep changing the name. Also, you know, Comeback Kid there. And yet it was I guess the sports streaming space that just held it back.
Yeah. Yeah, and it's very interesting that sort of the entertainment. I can't see that too well, unfortunately, but that was up year on year. Yeah, as I say, the next results of Disney will be very interesting to see how their sort of sports segment has, and you know they obviously haven't got Moana 3 coming in next quarter, so it'll be interesting to see their results, and I'd be a bit sort of bearish on the Walt Disney stock if I was in the market.
And can Iger and gang and the new, you know, they've had loads of restructuring recently, you know, can they start to turn, you know, turn this around? I'm showing you the chart here, giving you the weekly chart because, you know, it's starting to move slightly higher, but nowhere near, trader friends, the level seen, you know, way back in
COVID time sort of thing, wasn't it? All the streaming services.
Yeah.
Yeah, had great results. Yeah.
Yeah, all the streaming services and beverage alcohol companies.
Yeah.
Because guess what everyone was doing. On that note, we had a question earlier from R. Saxena about drinks companies, and also I think it was R. Sax or British Indian definitely, you know, said, oh, they were sad about AMD, and I was like, don't worry, I'm really sad about Diageo, one of the stocks that I have a position on, and I'm gonna maybe give it a yeah. I think it's I need to look at this because it's been very painful to watch. Thankfully, I have Palantir as well, so. But Diageo has been very painful. What's your tipple? What's your poison of choice?
I'm a wine man. Love the wine or sort of spirits. I was actually in the Devonshire last night drinking Guinness, but I would only sort of save that for the Devonshire or a rugby game.
Nice.
It's not really my sort of taste.
Well, there you go. Guinness.
Yeah.
Well, then you can talk to Diageo.
Yeah, exactly.
So, you know, what's your take? This stock has just, you know, had the most painful. Let's have a look at the monthly chart here. And you could see that, you know, like we were talking earlier, many of the streaming and beverage brewer stocks, you know, did well over lockdown. No prizes for guessing why.
Yeah.
But then they you know, slid from 2022 onwards and continues. I'll tell you why my thesis for Diageo, I like the fact that it is well diversified, right? It's got a bit of everything. It's got whiskey, it's got gin, it's got Guinness, it's got, you know, but it's even got vodka, Smirnoff, right?
I think so, yeah. My housemate used to work for Diageo, and so we used to have like plenty of like a whole booze cupboard full of Gordons, and I think he was Smirnoff. Yeah.
Nice.
That was a great benefit living with him. Yeah.
Did they get it like cheap, or did it get given?
It was all free because he would like take it out to the pubs and the off licenses and stuff like that, and try to sell it, and then he'd have like leftovers and put it in our.
Which company? This company?
Diageo, yeah. He used to be a salesperson, on-trade salesperson.
I'm going to put that in a folder in my in my head. You know, the thesis behind this British Indian is that you know, I really like the fact that they also diversified into the non-alcoholic space. So they've got like the seedlips, and they've got the mixers. They've got the, you know, zero Guinness, which to me is the my take on the whole thing is I love Guinness and Stout that's sold in emerging markets because they have a higher alcoholic content. Did you know this? You can get places where it's higher.
Really?
Because it's made for the export market.
Okay, interesting.
But I like the fact that, you know, Guinness is one of the few that I actually can't. I have to think about it. I can tell.
Yeah.
But I have to think about it before I spot the blind test.
It's a great substitute, isn't it? Yeah. My dad loves it. He doesn't drink Guinness, but will happily drink non-Guinness alcoholic, non-alcohol at night when he's trying to stay off.
Yeah,
stay off
and
during the week.
and the diversification is not just, you know, the people who want to drive and, you know, still go to party and have a great time but not feel terrible the next day, but it's also the younger generation, right, that are becoming healthier. I mean, have you?
I think it's to do with that, the healthiness, 100%. I also think people are really into sort of niche-y, like alcohol these days. So like, you know, they don't want to go for the big brands like Smirnoff or Gordon's. They want to go for sort of niche-y sort of spirits or beers or that they haven't tried before. I definitely feel like that's probably affecting the sort of revenue figures of Diageo.
Yeah, and the fact that every time I have a barbecue, my zero runs out before everything else.
Yeah, really.
It's crazy, and that's not due to me.
No, exactly. Yeah. Doesn't sound like a very fun party if the zeros are going before.
Well, because everyone wants to, well, they're driving from far away.
Yeah, true. Yeah.
But also, you know, they want to be able to function the next day, right?
Exactly.
So just very quickly, just whacking up my chart here, there was a big dip. Can't remember. It was a few weeks ago. I think it was around early this year. When there was a comment by one of their biggest shareholders, and I was like, no, saying that the company had not reacted fast enough to the GLP-1s. So, you know, the skinny pens.
Okay.
Those who are on the same drug but for diabetes. Because what they're finding now is that it's not just booze, it's just the want for anything that even tastes like it, even if it's zero.
Really? Yeah, really. Interesting.
Many analysts are now having to revise propositions like McDonald's, like your that Rich likes, your Burger Kings, your even supermarkets. Where do you shop?
I have very lucky to have an M&S right below me, right below my flat. So I would love to go somewhere else, but the convenience.
Well, it's so convenient.
It costs more, but it's just so convenient.
I'd be lying if I didn't say I wish I had one, you know, just down the road or just around the corner, right?
Yeah, exactly.
Now, the number of times that I've run out of milk. Oh. But you know, the fact that they've said that, and tons of companies, you know, 2 years ago have already started saying they're going to even change their labeling. You know, so even your ready meals in your Sainsbury's and your Waitrose, pay attention, trader friends, to those labels because they're all about to change soon.
Oh, really?
Yeah, because they're going to say things like, you know, suitable for those on well-being, or i.e. GLP-1.
Oh my God, it's a bit like when restaurants started having the calories on the menu, and it completely ruins the sort of experience, doesn't it, of eating if you know all the sort of how unhealthy things are.
Yeah. And the whole EV space as well feeds into this, because if we have driverless cars, autonomous cars, have you been in an autonomous car?
No, I'm not. I'm desperate to try it. My girlfriend, she goes to the US quite a lot with her work, and she's always saying like it's so weird seeing, you know, an Uber driver pick you up with no driver.
Yeah, and some places test beds in San Francisco. You already have that. Some cities in China. I've not been to China. Would love to go and try it out. But yeah, it's just they consider it every day now, and you just hop in. And the one thing that you'll find is most people often, if they're not on their phone, they're eating.
Yeah. Oh, really?
Yeah. Or now you can drink, right?
Yeah, exactly.
Yeah. So, trader friends, tell me how long I should wait on Diageo, because, you know, this is making me sad. This chart is making me sad. Graham McAnany saying he drives a 14-year-old VAG 2-liter diesel with 250k in terms of miles. Very reliable. Next car will be a hybrid, not going fully electric for another 7 to 10 years.
Oh, really?
I agree with this. Here's a fun fact. Highest growth in the US of vehicles being bought right now. Which category? Do you think it's EVs? Do you think it's petrol? Or do you think it's petrol hybrid?
Yeah, I'd probably say the hybrid. Just to people sort of dipping their toes in before they go full electric.
Yeah, there you go. Hybrid, so you don't get caught out.
Exactly.
You know, so that you have the ability to chop and change. I have definitely rolled back my, EV hunts, because I'm not quite sure where it's all heading. I don't want to, buy a Polestar, for example, and then find that Gilet, which has already said I'm not putting any more money in until we start seeing profit here, people, suddenly doesn't have the right number of service stations or infrastructure.
Yeah, no, exactly, very true.
Away from the numbers.
The first, you always want to have the guinea pigs in front of you and hold back.
Stand back.
Yeah, exactly.
I'll have away from the numbers in front of me. Away from numbers saying, Angeline, I've got L200 Mitsubishi Euro 6, negative 2.4, what is it? 2.4, sorry. 2.4 diesel. Next will be a Toyota hybrid. Away from numbers, loving that you share that I too drive a diesel. Away from numbers was a engineer.
Okay.
And now trades with IG. Argain, of course, Argain. EV, not practical, he says, for long distance journeys that I do. I as well drive when I do very long journeys, but I don't really use it during the week.
Yeah.
Monkey Man saying hydrogen for the win. Interesting. The only thing is there's not much choice.
Yeah, no, exactly.
And R. Saxena says Toyota, always. Love it. And Prius at the moment. R. Sax, we would love to know how much whether Prius has given you an indication of how much it would cost if you change your car battery. Right, final thoughts, Will, on the markets. Let's have a quick check on the FTSE because we have to wrap soon. FTSE touched an all-time high. Let's see where it is right now.
We're still going, yeah?
Yeah, we're still going. 8714, come on. Right, maybe let's have a minute chart here to see where we are. It's come off a bit now, but there's still time. There's still plenty of time for it to creep back up to that all-time high level. And on that note, we will see you up next for a whole load of other things. So stay where you are. We've got market measures, and we also have Gordon, or I call him Gordy, James Gordon with us, who did the full-time trader thing.
Okay.
And then came back to be our head of tax here at IG.
Oh, really? Okay, nice.
Right, we'll see you soon. Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Fundamental analysis is a method of evaluating assets to assess what their prices should be. It's based on the principle that every asset has a real fair value, which may be very different to its current price. It assumes that markets will naturally correct to reflect these fair values over time. The aim is to discover assets that are currently underpriced or overpriced, then place trades to profit from the expected correction if it materializes. Now, unlike a technical analysis that focuses on price charts, a detailed fundamental analysis would look at everything that could drive future price movements. The technique is most commonly used to scrutinize the price of shares, where annual reports, industry trends, and a company's management team may form part of an overall assessment. However, fundamental analysis can be used to review the price of an asset. A commodity like oil, for example, could be evaluated on the basis of economic data, regulation, brand recognition, geopolitical factors, and technical specification, among other factors. But while fundamental analysis is often said to be more comprehensive than technical analysis, it may not give you the full picture. For one thing, it's generally only useful for identifying long-term trends, whereas a technical analysis can help find short-term opportunities. For this reason, it's often a good idea to combine elements of both types to get the most accurate view of a market's direction. To learn more about fundamental analysis, join IG Academy today. It's completely free and gives you access to dozens of trading topics.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered, live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
Welcome back. So this is today a market measures dressed up as an options jive.
Nice.
Because this was the research piece that I went through yesterday while I was on the Tasty channel. Yes, making the first experience. What a nerve-wracking experience.
How did it go?
It was wonderful.
It looked great. And also there was no later. You looked like you were just, right there.
Well, that was because you actually were in the studio, weren't you?
Yes, I was the other side.
And how was that? You're in Bat's seat.
It was great. It was just very, very surreal. And also, Bat over there has, if you don't know where to put your legs, he's got a flask of coffee that big.
You're right.
That's how he gets through the day. But it's also interesting because I've also been where Veneta is.
Oh, yeah.
And gone around there. And in fact, when I did join them, it was from Veneta's seat.
Okay.
And it is surreal, but the great thing is there's such great hosts that you feel like you're just there, right?
Did you have to stand on something?
I had to stand.
Brilliant.
in
I was
the
going
end-
to say, I think Vanetta's a bit taller than you.
And
isn't
in
she?
the end, what felt comfortable was they got like a high chair-ish, kind of like what I have here, and then like a stool thing. So I kind of like part sat.
Brilliant.
And what I loved as well is after that, my leg did hit something on Vanetta's desk.
Right.
And it was a giant bottle of unopened rum. I think it was rum or
Great.
whiskey.
Fantastic.
love
Well,
it.
they ended up, they were eating spotted dick yesterday with custard, ambrosia custard.
How did they find the spotted dick? I heard them saying the name and giggling.
They actually loved it. And Tom even washed it down with some iron brew. So
Ah!
it was a Scottish welcome for me. And yeah, so it was great. And we went through the opening of the show. They stitched me up live on air, thanks to our own Terence in the gallery here that I now have a vendetta against. And yeah, then we went
No
through.
less from them.
Oh yeah. Oh, he did well to find it. Then we went through confirm and send, and then we went on to this options jive. Now I want to bring this to you today as a market measure because it's really important, and it's got a study into what happens with your buying power reduction, your BPR, so that's your margin in Tasty Speak, over the Mondays that we had DeepSeek and the tariff shocks, because I personally ended up getting a margin call which scared the living daylights out of me, because the past 2 Mondays have seen a significant rise in the VIX after those big weekend market news. This has caused some traders' overall portfolio BPR to balloon, mine included, causing them to allocate more capital than they initially started with, i.e. a margin call.
Do you get a different sound when you get a margin call?
Oh no, you get an email.
Oh!
Oh, yeah. It's a big, you know.
Big red flag.
Yeah. Now, thankfully, Pete Ward also was all over it, and he called me.
Right.
And he went, Rich, you know you work for the company. That means you're meant to know better than getting margin calls. So why did this happen, and how do you stop it happening at home? Because I definitely don't want any of you guys at home to get into the same situation. This is due to buying power reduction expansion. And defined risk strategies don't usually change the BPR, so they're fine. If you've got a defined risk strategy on, i.e. a call spread, or you know exactly what your iron condor risk is, then that's not going to change. However, undefined risk strategies that I do have a lot of at the moment, i.e. selling strangles, have the possibility of BPR to greatly change throughout the trade. This is why different account sizes are only able to trade undefined risk with certain stocks, as shown on this next slide. And this takes you through, basically, it's what the underlying price is, right? So the stock's under $100, then they're easy enough to trade with a $10,000 account. $100,000 account, you know, that's your sort of $350 stocks. Now, this isn't something you generally have in stocks and on the IG account, right? This is much more a tasty thing to learn with us as we go along this journey of learning a new platform. Now, the big stocks, and this is where you know, the problems can come quickly, is something like a Tesla or a Microsoft.
Very volatile.
Volatile, but their underlying price is around that 400 and up, right? And the Spider, of course, 600. Costco, yeah, Tesla, what is it now? 400, well, 380 this morning.
I'm surprised I don't see Nvidia on that list as well.
Well, Nvidia's fine because it's only a $100 stock now. When it was 1,000, it was a big problem. So yeah, this is so really important to know where you sit if you're gonna trade these undefined risk. Now, what is the formula for working out what your BPR is going to be? And Sahil and Kai both took me through this, and now I know it. You know, it's like riding a bike. Won't forget it now. You take 20% of the underlying price of the stock that you are putting on the trade with. So let's say we're selling a put in Nvidia. You take 20% of the underlying price. So in this term, what's that? It's going to be 25 now. Then you take off any out of the money value. So i.e. if I'm selling the put down at 90, then it's so far out of the money, you can take that off as a benefit for yourself.
Right, right.
But then you add back in the option premium. So adding back in that option premium gives you this kind of example. Right, now, excuse this a second, we'll just get the computer back up and running. Yeah, it's really good to see because it takes you through selling naked short puts on, for example, a 16 delta option on the spider. What is your BPR going to be? How do we come to that calculation? The calculation's done by taking 20% of the spider price, i.e. a fifth of 6,000, a fifth of 600, multiplied by the 100 multiplier. That gives you $12,000. So your BPR, if it was just that, would be 12,000. However, you get the benefit because you're so far out of the money, there's obviously less chance of it going wrong. You know, it's only a 16% chance it gets down there. So you can take off 3,764 because of that. So you get a benefit. Then you add back on the premium that you sell it for. And that gives you an overall buying power of 8,500.
Right, so this is achieving more buying power and understanding how to get it back.
And yeah, how to play the system a little bit if you're a little bit capital constrained.
Yeah.
And this is exactly what happened to you, Ange, on that very first trade of selling the strangle on the S&P.
Yes.
That Frank took you.
Yeah. I chose S&P first. I should have chosen something, you know, really, really small. But yes, I had the shock of my life.
And now we know why it was.
Yes. And it was undefined. And I had a shock because I'm very new to this. And it said it didn't have, it had undefined losses. So that was yeah. So.
And it's those undefined loss potential that gets you on the BPR. Now, if we look at that and we go down to a 16 delta strangle, so you're selling a put and a call, then it very simply takes the highest one of the two because you can never get done on both sides. So it says on the put side it'd be 8,500, on the call side 9,400. So therefore your BPR is 9,400. Now, let's take this into an actual real example here. So we can see on NVIDIA how this is actually going to work. Because some traders are curious why the BPR for their naked position, such as short puts, short calls, and strangles, can suddenly change. And this is what happened to me on that Monday of DeepSeek. And it often increases even when the underlying price hasn't moved that much. Aside from stock price movements, the next big reason for BPR fluctuations is an increase in implied vol. A quick spike in IV can boost the option premium, which in turn raises the BPR. Now, here it is. Here's the actual real numbers of what happened to me because I was short puts in NVIDIA when it went down 17%. So, excuse me. If I got a position in a 1 standard deviation strangle expiring in February, you can see here, when I first put it on the 23rd of January, then the BPR was $2,000, right? Because the IV was 41. That's a pretty normal implied vol for NVIDIA. Then you come in on Monday morning and boom.
72.
72 vol.
I mean, the vol was crazy that day.
And remembering the stock was down 17%.
Yeah. I believe that was around 6 p.m. our time or 7 p.m. And I opened my laptop and swiftly shut it and thought, I'll look at that a bit later.
The next day, however, it did rally 5%, remember, 6%. So the vol dropped to 61, and therefore the BPR that had doubled the day before, and that's why I got the margin call. That dropped down to 3,000. But then on tariff Monday, it went back up the vol even higher to 74. And yeah, this time the BPR was 4,500. Now, this happened on a few stocks because I was short puts. We can come back to Vision for a bit, actually. I was short puts in AMD. I was short puts in NVIDIA and also Microsoft. So it was like 2,000 added there, 1,000 added here, 1,000 added there. And suddenly, you know, I was having to put another 6,000 in.
Suddenly you get Wardy on the phone going,
Wardy on
what
the
are
phone,
you doing?
chasing me. Now, it doesn't happen very often. And the reason why it happened at all was because I was over allocating my capital. I wasn't in a safe range. So slide back up. Therefore, it's crucial to allocate capital wisely into options positions. This is exactly the same as your leverage trading in the IG platform, right? You shouldn't be anywhere near 100% use of your capital. Nowhere near it. Typically, we should keep our total committed trading capital to around 25%. Now, that's low. That's, you know, Sosnoff argued straight away that's too low, especially when IV is low. When IV is elevated, traders have the opportunity to take larger positions to capture higher premiums. However, any capital allocation exceeding 50% should be carefully monitored, which is true, as this number can quickly expand if the market moves against the portfolio. 25 to 50 is perhaps a little bit
On the cautious side?
cautious, exactly. Sosnoff was making the point, yeah, it's probably maybe a third higher than that.
Right.
So, you know, that and more aggressive. Most people have a little bit more aggressive than that.
What's Tom's sweet spot when IV is elevated? Does he have a preferred capital?
It seemed to be very sort of dependent on what was going on at the time. But personally, at the moment, I'm still too high. Actually, I'll check it today because I did a few things yesterday. So have I learned my lesson? Possibly not.
Is there a function that tells you and it calculates? So, for example,
it's right there.
Because the thing is, you know, you might feel I'm being good, I'm being prudent, I've got the guardrails, and tomorrow or overnight, the Chinese do something else or Trump does something else. Is there a quick calculation that shows you straight away?
That's why it's so worthwhile learning about gamma. Because if you understand your deltas and your gammas and where your vol's sitting, then you can work out roughly if there was a vol shock, how would you be looking? Now, I'm currently at 76% of my capital allocation. So, you know, if there was a shock overnight, the only reason I'm kind of relaxed with that is because I'm net short on my deltas. So therefore, if there was a vol shock, that probably means the market's going down and I would benefit, and therefore the P&L would benefit
itself,
me.
yeah.
But 76, I'm trying to wean myself off the capital usage. I would prefer to be 65, something like that. Right, do you want to take us through the takeaways, Miss Angeline?
Right, so the BPR can fluctuate significantly, as Rich found out recently, in undefined risk strategies due to stock price and implied volatility changes. Unlike defined risk strategies where BPR is more stable, defined strategies like, for example, iron condor or vertical spreads, this can lead to overcapital allocation in your portfolio with adverse market moves like we saw recently with Monday DeepSeek and Monday tariff
Terrifying.
tantrum and terrifying as well. BPR is mainly determined by the underlying price, on the money strike distance and option premium, with strangle BPR based on the higher BPR of the naked put or call. Allocate your capital wisely, maintaining around 25% in low IV and monitoring positions, more than 50% in high IV situations to manage potential rapid BPR expansions.
Wonderful. Now, coming up next, a man who would never get himself into trouble like that because he is, oh, what are they going to do here? I can see you coming, Terence. I know.
What is Terence doing?
Go on then, play it out.
Go on, Terence.
You have the permission to. Yeah, coming out soon is James Gordon.
Yes, head of tax here at IG, and he is going to show us what can happen when your trade goes wrong. It's
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered, live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
I'm Ben Hemmington, and I head up the sustainability function here at IG Group. IG Group pledges 1% of its annual profits and directs this to community initiatives. This is a pretty significant amount of money. We're talking several million each year. And I used to work in the charity sector, so I have first-hand experience of just how much of an impact this money can actually have if it's used wisely. In particular, we are focusing on empowerment through education, so looking to see how we can empower members of our community that are disadvantaged in different ways by providing access to quality education. It's an area of work that we're really proud of and that we're having a really excellent impact in. On the IG Group website, we have a download centre which has got lots of information about our sustainability function. Here you can find out more about our product governance, about responsible investments. We have documents around our diversity and inclusion, including a D&I statement, KPIs and targets, as well as our progress against these. You can also find a number of documents relating to how we manage our environmental impact. And then also on that download centre, you can find our community impact report that talks all about our Brighter Future Fund and the impact that it's having.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Hey trader friends, welcome to Trading Experiences with myself and the head of IG's group tax here, James Gordon, here for Trading Experiences. Now, we've done this with James Gordon. This is the 4th in the series.
That much already? You keep asking me. Eventually, I'm going to say something interesting.
In this part of the series, we're going to show you a quick picture before we come to explain what it is. But this is what can happen when trades go wrong. And we looked at this and thought, oh, this is the other side of James we've never seen before. Right, we'll get to
the real truth, yeah.
The real truth, the other James. Right, let's come off that now. So for those of you that have been along with James and I on his journey, we talked about, you know, when in the first of the series, when you had that light bulb moment and you wanted to answer the, what if I traded full time? And then in the second part of the series, we talked about how you activated this light bulb moment. And then the third, we talked about, you know, structuring your day, right? And getting your plan into motion. Now we're talking about the difficulty of trading. Now that the plan is in motion, you know, how was the reality compared to what you had in your plans?
Yeah, I mean, there's a lot of chat out there, right, about the theory, and there's lots of stuff that makes lots of mathematical sense, but when it comes to it, you're sitting there and it all goes out the window because, like I've talked about it before, the chimp takes over, all this kind of takes over. Your keyboard maybe doesn't work as best as you wanted it to work.
You're going to blame it on the gear?
Always. I've got to find someone else to blame. You know, that's a way to protect yourself. No, seriously. In trading, like, there's only one person pressing that button, and it's you. There's no one's fault. It's not the markets. It's not anyone. It's you. So yeah, you have all these rules out there. You know, money management rules, all your rules to enter a stock, enter trades, but sticking to them is so difficult.
So hard.
And sometimes the rules, the perfect textbook rules that people talk about, the 3-to-1 risk reward, the 1 or 2% capital risk, they're great textbook rules, but what they don't tell you is how hard it is actually as a human to apply those rules. So it's maybe worth sort of delving into some of those at some point on today or next week or whatever. You know, the one I did like actually is the 1% risk capital. You know, only risk 1% of your account, maybe 2% of the account, and that's a really powerful number because if you risk 1% of your account on every trade, you have to have 70 consecutive losing trades to halve your account. The chance of having 70 consecutive losing trades is not very high. If you do, you probably are
doing something
have a little think about what you're doing. It might not be the right thing. 2% is like 35 losing trades in a row. So that gives you a really long time to figure out what's going wrong, and you still have some account left to trade with. So yeah, that's probably the one rule out there which I did actually mostly stick to. Of course, I didn't always stick to it. I bent the rules and came up with reasons why I could break that rule, and if I had a higher probability trade.
Did you kind of know that you were breaking the rules? I mean, did you have written it down? I have a lot of post-it notes and things on the wall to remind me.
Yeah, I mean, on that picture of my desk, you'll see there are some post-it notes on it. I have post-it notes everywhere saying, don't be an idiot, remember this rule, don't, you know, blah, blah, blah. But also the system I designed had, you know, like, was it last week we were talking about the journal and the probabilities?
Yes.
Once you've got confidence in those probabilities, that allows you to then break the rule, bend the rule a little bit. The biggest one I break all the time is the 3-to-1 risk reward kind of thing. It's great in theory, but if you think about what it means, like mathematically, it's a total winning idea. But what it actually means is you take lots and lots of small losses. And psychologically, that then means when the 3 comes along, maybe you don't actually hold it to the 3 because you've just been punched so many times with these small losses because that's how the system works.
Right, right. So you take
bail
it
out
off.
at 2.
Yes,
and then
you
obviously
take it off before.
And then the system doesn't work if you don't take it to the full fruition of 3. So to throw the cat amongst the pigeons, maybe, like there's going to be some haters out here now when I say this, but my system is kind of the opposite. I had reward of 1 and risk of 3 or 4.
Interesting. So talk us through the reverse, how you came to the conclusion that the reverse worked for you.
It's maths. So I had a mentor for a while who pitched this idea and I thought he was mad. But then the maths showed me, no, it's actually not mad and it's much easier to handle. So the point of a 1-to-3 ratio is you get a lot of winners, or should I say, a very high probability of not losing. So the losers on that system were like 7% of the trades, 30% break even, and the rest hit the target. So psychologically, it's really easy to stay in the game because you just keep having little wins, little wins.
Yes.
Occasionally you have a hit, and that hit is painful, but it's actually, I think, personally, no, this is all personal, obviously, it's less painful than the hit that you feel of just having the little chip of 1, 1, 1, you know, losing 5 in a row and then getting your 3 or whatever. So that's how it worked for me.
I guess the other thing too is to understand, you know, the rhythm of what you're trading, and I get what you mean by inverting that rule, because, for example, if I'm scalping, I'd have a different sort of risk-taking strategy, because if I know with conviction that this trade is going to go a certain way, but I am literally sat there at the screen trading for the next just 15 minutes, scalping. If it's going rapidly that way, you're just going to, sometimes if it's 1-to-1, 1 to, you're just clipping away until the trend changes.
Yeah. And again, to hark back on it, do the maths, do the data. You'll find out the patterns that work for you, the risk tolerance that you have for, some people are great at taking lots of little losses and then the one big win. For me, it worked the opposite. You'll figure out what works for you, but you have to be in it to win it, kind of thing. You have to take that pain to start with, and when you're figuring it out.
Lots of viewers who are following the series avidly because they have, like you, embarked on that journey, are also wondering, when do you decide? I mean, do you take snapshots? How do you log your hit rate with each financial asset?
That's back to every single one is in an Excel spreadsheet which shows entry, exits, maximum amount it was offside, maximum it was onside, where did you actually exit, why, and then an actual visual screenshot of the trade to be able to then come back to it a week later, a month later, maybe 8 years later, and see what you're up to and relive it. And then when you step away, a day later, you look back at the chart and you see totally different things. You're like, oh my God, what was I thinking? Or, oh, I'm a genius. And so that boosts your confidence, or it helps you, learn from your mistakes, and it shows you that you're not always seeing things clearly in the heat of the moment.
Yes.
That's why planning trades are so much better than just hitting at market, because you think you've seen a pattern.
Funky Gibbon, thank you for chiming in here. Funky Gibbon saying, thank you so much, James, for the insights, loving it. I'm moving to trying to trade full-time and learning loads, hopefully, from the show. If you do, please slam the like button and follow us. I'm also learning a load, and also feeling less lonely. I love talking to people because, sometimes it's a very lonely sport, isn't it? It's a very lonely sport.
Super lonely. I was for the first time, I used Facebook when I was trading because I felt connected. I mean, I'm maybe not the target audience for Facebook, but I suddenly started connecting with people on there because I suddenly felt like I had to talk to people and share my pain in life and see what they were up to. Because I wasn't just going into an office every day and doing chit chat. And these communities they help you realise you're not on your own. There's plenty of us out there. So it's not easy,
The DAX, I've got that up. Did you have a community, for example, of DAX traders? I know you traded the DAX. I've pulled it to where I think it was on my IG platform here. You said 2017.
Yeah.
And I've marked out some of the lines that you had. Show us that chart.
Crikey, what's this? What time frame are we on here?
So you mentioned that you took a snapshot of between November and December of 2017, is that right?
Yeah, well, I traded 5-minute charts, so my detail will be buried inside one of those bars back there, so you're going to have to do a lot of scrolling.
5 minute, you said, 5 minute.
But yes, I did trade the DAX a lot. The DAX was, back in the day, the DAX back then was it was 30 companies in it, not 40, so it was super crazy, like all over the place, but quite fun to trade.
Yeah, I'm going to try and bring up your chart if possible. Bear with me. We have, I thought we could
I did find an example where it actually went right, didn't I? Mostly I took screenshots where it went wrong, but sometimes I say you have to take a screenshot of a good one just to give you a little confidence boost.
Yeah. So talk us through your thinking whilst I'm getting this up. I promise that it will be just a few seconds away.
So yeah, I was very technically focused because I'm trading super short term. Like fundamentals is super interesting. Right? There's loads of people on this show, very cerebral, talking about macroeconomics, and it's super interesting. But as a short-term trader, I just don't care. Like it's all about charts, support levels, and maybe 1 or 2 technical indicators, but keep it simple on the technical. So I was looking at when do support levels break?
Here we are.
Support or resistance levels. And so in the morning, you draw up your charts, find those natural support and resistance levels. You then have big round numbers, which tend to act as magnets for price action. And in this case, there's a pivot point. And pivot points are completely mad. They are just, what's it, like yesterday's open, high and close price divided by 3. how the hell does that mean anything? But somehow it quite often does. And if there's no market information, no other news, the market, as you can see on this chart, gravitates to that pivot point. And so early in the morning, cash open, it breaks through the pivot point, comes back to test it, goes up. So that gives you an indication, well, maybe the pivot point is in play today. It then comes back down just after lunch, bounces off it again. Oh, okay, that's now my confirmation. That's now a level. People now will see that level. And they'll be expecting it, there'll be a load of traders expecting it to bounce off the level again. What does that mean? That means their stops are underneath it. So if it does break that level, all their stops get triggered, their stops being sell positions. I'm going to get in on that sell position, that the momentum that sell position creates, and just take, on this case, probably what, 10 pips, 15 pips? Now, most of your traders out there who try a little bit longer, they're like,
I know,
10 pips?
you're so good. You're so good. You're not greedy, are you?
No, well,
You're not greedy.
the greed is what gets you. But look on that chart, that the stop for that would have to be up at what, 13,150?
Yeah.
And which is way more than, you know, that's not good risk reward classically.
But you've taken it early.
You get in early and, and you take that 10, and then ideally you're running 2 or 3 contracts, so you take the 10 initially and then you let the second one run a bit further. But the chart tells you that it's going to probably get to 10 and then bounce back, because if you look at like 8 o'clock, 8:30, there's some noise there where it's sort of creating a bit of resistance and support. So probably when it does break, that's the next point where it's going to have a little think. Hence, book the 10, then let the second one run.
I love that we're talking about this too, Gordy, because, you know, there's so many people out there that say you can't trade the 5-minute. You can't trade anything, you know, smaller than 10. There's too much noise. But actually, loads of people trade different time frames.
Yeah.
And
I went down to 1 minute sometimes, which maybe that's intense.
That is intense.
But it's still, the patterns are all valid. Whatever time frame you're on, it's all the same. These are just points where buyers and sellers are having a bit of a competition. It doesn't matter what time frame you're on, it's the same fundamental, who is driving that market.
Let's take a quick look at something else that you sent us, which was quite interesting as well. Here's a look at your trading desk.
Yeah. Oh, it doesn't look like that anymore. So
here are your post-it notes up here. Talk us through what these post-it notes, and there's a picture of a boat as well. Was that to inspire you?
That's the, what is it called? Manifesting or whatever. You put that there to sort of inspire you to not be stupid and lose all your money. Sort of worked. But yeah, so a lot of those post-it notes are just putting, there's one, if you actually, it says kill you on it, which it says, if don't do preemptive breakout trades because they kill you, i.e. get in before the price action breaks. But there's a couple of...
I love that.
Because this, like I said before, one bad trade can wreck your account.
Yeah.
One good trade is not going to make you retire.
So we need to talk about this, because the preemptive trade thing drives me crazy, because I'm trying to find a way, and I've been talking to the DevOps team as well, of a way where I can time a ticket so that it goes through if it passes this point. But there's always slippage, right?
Yeah.
But I want a theory to be in place, and I've put my level where I want the order to execute, and I want it to not do anything if it doesn't hit that. And my issue, trader friends, if you guys know, or indeed if you have an idea of how I can do this when there's like a lot of slippage, so there's a lot of noise surrounding that stock when it opens.
Well, this is why I traded mostly currencies, because of the liquidity in that meant the slippage was maybe. So yeah, I was using stop entries rather than limits. So that was, the machine would then fire a market order once it went past that level. You get slippage on market orders.
I know.
In currencies, you tend not to so much, because there's so much liquidity there.
Yeah.
So maybe a really volatile day, you might get a pip slippage. But yeah, in stocks, you can get some horrible slippage.
Yeah.
So I never trade stocks. I don't have a clue about stocks. If you hear me talking about stocks, ignore it, because I don't know what I'm talking about.
Last but not least, because we don't have much time left, but don't worry, we've got 2 more in the series. If you want to ask James anything, do email us and we'll get him to answer it. I just wanted to bring us back to this amazing picture. I was gobsmacked when I saw this, and I thought, this is so unlike Gordy. It's so unlike you.
There's a good lesson here. So
what happened?
From memory, so it was a wireless keyboard, and it had a little
You were
became an
trading on a
ex-wireless
wireless.
keyboard. So the lesson here is look at everything else. They're all wired up. Do not use wireless stuff if you're doing short-term trading, because you know the battery's going to go flat just at the point where you want to click something or it's going to do something wild. This keyboard probably did something, and I gave it a bit of a lesson. And then it became my therapy keyboard. I kept it for months, and every time it went wrong, I had something to just sort of smash around like I was on Wall Street in 1980. You know.
Nice. I might need to come and borrow it one of these days.
It's good therapy.
And on that note, do tune in for the first few in the series if you haven't caught them. And also we'll have 2 more to come. So give us your questions if you want them answered here at ask@ig.com. Thanks for watching.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer 2 ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Hey, welcome back, trader friends, to Trade Expectations with me and Patrick Taminius, who joins us from Stockholm. Hey, Patrick.
Hello.
How is it going over there? How are you? We spoke last week, and you were saying that it's still looking quite cold and cloudy over there in Stockholm. But has it perked up now?
It is cold still. It's even colder today, but it's a beautiful day with the sun out. So and the stock is up. So and the stock exchange. So I'm just happy today.
Oh, good. And looking very crisp in your suit as well. Assa Abloy, we're talking about stocks and trade ideas with Patrick today, and we're going to kick off with Assa Abloy because that is one that you like, one of the major companies that is one of the crown jewels of Sweden's corporate space. Why Assa Abloy?
Yeah, so I picked 3 stocks to talk about today, and they when we talked yesterday about the show, they were the ones I looked into. They had earnings reports this Tuesday, so naturally that was the companies that came to mind to look into. So Assa, just as you said, it's one of the bigger ones here in Stockholm, and so I want to compare these 3, which is Assa Abloy, Swedish Orphan Biovitrum, which is Sobi in short, and then Loomis. And they are quite different, as you will notice, so they're interesting to compare. But if you start off with Assa, and for those who don't know the company, it's a company that's a supplier of locking and physical access solutions. So you have the locks, doors, gates, entrance, automation, stuff like that. And the larger part of their customers are government and non-residential customers. So they had this report 2 days ago, and it came in higher than expected, both on revenue, but also net margin, and also on earnings per share. But it's been trading sideways, and the market didn't really like the report, and that's basically on growth. So if you look at earnings this season, it's all about beating on earnings growth and showing that you can actually increase the growth this year, and having a good forecast or outlook for earnings. And they missed on that. They have a slow organic growth, earnings growth on around 0%. But so the growth came from the acquisitions. They have a good pipeline this year for acquisitions, so I think they could still have some growth from that. But it was traded down on the expectation of flat growth, organic growth this year.
What I like about Assa Abloy is that for an analyst, it's also such an interesting stock and a key indicator of economic growth, and gives you that kind of 6-month oversight, because you know, it's everyone needs locks, right? Everyone needs mechanisms to secure buildings, for example, and secure warehouses, and Assa Abloy is plugged into all that, including digital door locks as well, and hardware. Plus, they're such a big company. They're widespread. I love the fact that, you know, geography-wise, they have 5 main segments: Europe, Middle East, and Africa, North and South America as well, Asia, Australia, and New Zealand, the Asia-Pac region, and they've got global tech and entrance systems. Do you look into like the different regions to also kind of get a sense of, you know, where weakness lies in terms of economies, and where, you know, we might now, for example, see impact from the Trump tariff talk?
Oh, exactly. So you have to have that in mind. And Assa was hit and traded down on the tariffs talks when they were decided some week ago. And I think they haven't really gotten that relief rally since Trump backed down or agreed on with Mexico and Canada on the tariffs. So of course I don't have that in my head, just the number of share. I think it's about 28% at North America. But as you say, it's a good indicator for sort of the health of global economy. And seeing Assa actually beat on revenue and earnings is pretty good.
Yeah. And it's you know, its operating margin is a decent 16%, net margin more than 10% there. Dividend yield also 1.7%, but like you said, it is trading in a channel and sideways at the moment. It'll be interesting to see whether we will break through on the downside if the tariff talks turn into something more sinister, especially if it starts to impact building and growth in those sectors I mentioned earlier. Right, so that is...
Yeah, exactly. So just let me finish on that. And the fundamentals looks good, but it's trading at around 23 price to earnings, which I think is a bit high for this slow growing company with no organic growth and just growth from the acquisitions. Just before the earnings, we were at 24 times earnings. So it's just come down a little bit. It has to, I think, come down a bit more before we could actually see, and that will be like a cap on the share price, I think, this first quarter at least.
Nice. And for our trader friends who are interested in that stock, you can very quickly, on the fundamentals page, take a look at what was mentioned by Patrick earlier under key company data. Right, so up next, Swedish orphan Biovitrum. Now this is one that I'm not au fait with. Take us through the stock.
Yeah, sure. So it's a biotechnological company. It research develops, manufactures, and sells pharmaceuticals, and it has therapeutic areas, which is mostly hematology, immunology and genetic and metabolic diseases. Sorry for the English there, but the biggest segment is hemophilia, and they have the drugs Alprolix and Elocta. That's sort of, so the biggest, and also where the biggest gains come from is immunology from the last quarter.
Don't worry, it's better than my Swedish.
Yeah, thank you.
So it's been doing, and yet it's shares were whacked after its fourth quarter report. So what's going on? What's going on there?
Yeah, so it's interesting. They actually announced earlier in January that they would expect a higher earnings than expected by the analyst, and it traded up on that. But then when the report actually came out, they had a lower guidance for the year, so it was traded down quite hard. I think it was down 3.5% or something over the day, just for the outlook for the year. But as you've seen on the chart you're presenting, it has regained those losses, and the share price is higher than before we had those early earnings indicators in early January.
Yeah. So you think it was just a minor correction, a minor sort of blip there?
I mean, for the reports, it's about earnings growth and where market sees earnings go. So when you just see it out, the guidance for this year revised lower, I think the stock will be punished for that. But I mean, we're all looking for growth this year, and year over year, Sobi had 17.6% growth, which compares to Afta, which I think is around 6%. So it's a growing company, and it just had the FDA approval for their Diplotet, which is within the immune area, and that made some great impact on growth. And they also have the last FDA approval within the hemophilia space in 2023, which I think will continue to drive some growth for the company. So it has a growth outlook, and I think that is what analysts and investors are looking for. And I mean, the margins are good, and it's trading a bit higher at a P ratios of 32. Before earnings was 29, so it's a bit higher, but you expect growth from this company.
Interesting. Perhaps maybe the point here is that it's got a good outlook, but so do its rivals, and also they didn't offer up a dividend. I think is the other thing. No dividend paid for 2024. Perhaps the quietness in this space in a time when we're seeing lots and lots of companies talk about dividends. And this year, weirdly, Patrick, I don't know whether you feel it your side, but we're certainly seeing a lot of buybacks here since the start of the year. So
yeah,
a
sure.
lot of buyback
I mean, Sobi
action.
has a history of not paying dividends.
Right.
So it's not very uncommon for this company. Actually, they had just a year ago, so they had an offer for the company, which was then eventually declined. But so it's an interesting company with possibility of someone acquiring Sobi down the road. So dividends at this point, I mean, they are using the earnings in a good way to actually grow the company. So I think markets are not really that disappointed on that.
As you cover the space closely in biotech, do you think the first half is a stock pickers market, or do you think that generally they'll get an uplift, or do you think lots and lots of investors will have to be very choosy about which stocks in biotech and indeed pharma?
I think you should be picky in this market in general. I mean, it's all about finding those companies that have a good growth potential, but also have solid earnings. So within the healthcare space, I mean, we have had some good reports this week from AstraZeneca today, but also Novo Nordisk and Sobi and Pfizer. So I mean, it's a good space. If you look into the index for the sector, it's good. So you could actually get some potential by just going into sort of the sector with a healthcare fund or something like that, an ETF. But I think in general, we are in a stock picking market, and you should definitely look into the companies that you're wanting to invest in.
Cool.
So
yeah, it's going to be an interesting space. I think that there's a lot of money swishing about looking for a home. Barclays, I believe, was saying that first half one has to be choosy, but second half there could be a re-rating once everyone knows what happens with Trump's policies. I kind of think it's kind of the other way around. I think that at the moment, no one really knows what's going to happen with Trump's policies just yet. So, we might get an uplift in the first half, but in the second half, it's going to be very tricky for the space. But that's my humble opinion.
Yeah. So, I mean, it's hard to have those type of narratives for the year. But as I look into the next quarter, we have just the earnings for the quarter this week. And then for these companies, you have to wait another quarter for the next earnings. So you look into the outlook, and companies with a good outlook should be trading upwards during the quarter if nothing major is announced or happens. And companies with a bad outlook should be traded sideways or downwards this quarter. So that's what I'm looking into. And we have talked about the macro picture a lot. That's sort of like the foundation. So if we have a good situation for macro, I think that will be good for the stocks. But in the end, it's all about earnings and the forecast for the next quarter report. So that's where I am. I'm not really sure about next half of the year. We'll see what happens. But I mean, Trump's tariff, as we have talked about a lot, he has been back and forth with that. I didn't really think he would implement that. He threatened that he would, but now he found some sort of deal with at least Mexico and Canada. So hopefully that won't give that much. But actually, I looked into some of the cost for sea transport indexes. For example, the Baltic Dry, but also there are multiple of those. It's been coming down. Don't remember exactly, but it's been traded down a lot. So since at least September, October last year. So if you have 10, 15, 20% tariff, that's actually where we have gone down with the cost of shipping and transportation. So it could really net that effect also. And you have to take that into consideration looking into the next CPI, but also the next earnings report coming in a quarter.
Right.
So the last one is
Loomis. We've got a
Loomis.
few minutes left, so let's talk about the last one, Loomis, one that is offering a dividend.
Sure, yeah. And for those who haven't heard of this, it's a Swedish cash handling company. Biggest markets are Europe and North America. And of course, it has been a fear that since our community is going into digital and we're using less cash in the communities, there's been a fear for the growth outlook of Loomis. But the company reported stellar earnings. It beat expectation on organic earnings with 12%. Expectations was around 4%. And profit margins also increased more than expected. So as you can see on the chart, it's been a good 2 days trading. It's been trading sideways before that, since the outlook of 4% wasn't that much. And this has been rewarded a lot. I mean, the company has been trading at a PE level of 15, which is really low. But I think that's more of a fear of the market shifting to digital and use the fear of slow growth. But I think that will continue, even though I think this company will be trading upwards for the next quarter. And it could still at least be trading up to 20 times earnings.
Cool. It has a decent dividend yield as well, just under 3.5% there. It's interesting that you talk about, this threat of, digital money, and have they had any outlook on what impact crypto and digital currency might have on their business?
That's not something I have in my head, but definitely interested if I've missed something on that.
Well, it's quite interesting because they handle cash solutions, and they have services where they check to make sure the cash is authentic and real. So it'd be interesting to see, because over here in the UK, and I'm sure in the Scandinavian countries too, we've seen a real drop, at least in the capital cities, of cash usage.
Yeah, so I think it's interesting here to see where what drives markets, because Loomis actually have quite a slow year-over-year growth rate. I mean, it's been for this year it's been 6%. So looking into the other two, if we compare them, I mean, ASA have a growth rate of 6%, but it comes from acquiring companies. It's not organic, but still year-over-year around 6-7%. They have a higher net profit margin. Well, they're trading at the higher PE, but not that much. And they are getting hammered by the market, whilst Loomis is really appreciated. So I think they're looking into maybe the short end where it just beat the expectations for this report. But still, Loomis is growing kind of slow, and their margins are lower. So that's why I personally favor companies more like ASA.
Interesting. Thank you so much for taking us through ASA, Loomis, and the Swedish orphan. It's a very long name, isn't it? Swedish orphan Biovitrium. Have I said that right?
And all the drug names are also really complicated.
Biovitrium. It's really interesting stuff. I'm so glad we are able to cover that, because a lot of the times it's finding these little gems on the platform that we can trade that sometimes gives us better relative returns with lower volatility. Right. Thank you very much. Speak soon, and see you next week.
Thank you.
Stocks are up, but nearly everything else signals risk off. It's Wednesday, February 5th, 2025. This is Overtime. I'm your host, Chris Vecchio, in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan, and take you through the next hour as we finish up this futures trading session. If you're joining us on YouTube, tell us what you were trading today, what you think of this market action as we shake off AI news, tariff threats, what have you. If you're already on the platform, well, if you're not on the platform, come over to it. Come over to tastylive.com, see what we're all about. Today, guys, stocks do grind higher. Russell leads up by 1.05%. The S&P and the NASDAQ, modest gains, 0.35, 0.4% respectively. Bonds, however, are the big winners as we turn to the charts here. We see here that ZN, ZB, both breaking out to fresh yearly highs on our charts, which is nice. Gold tops $2,900 an ounce in the futures market for the first time. Crude oil's off by more than 2%, and the dollar showing signs of topping, with the yen emerging as the top performer today. Ilya, I want to stick with the bonds here because this perhaps is the most meaningful thing that we've seen.
Yes.
The Treasury quarterly refunding statement came out today at 8:30 a.m. Eastern Time, and there were a few notes in here that perhaps offer some insight to the trajectory of deficits and debts in this country. I point that out because the Treasury under Scott Bessent believes the current auction sizes leave it well positioned to address potential changes to the fiscal outlook. And moreover, based on the current projected borrowing needs, they maintain these auctions and the sizes of those auctions for the next several quarters. There's narrative continuity here from policymakers in DC that is perhaps a breath of fresh air for those that are looking for something a little less chaotic than what's been the first 2 weeks of the Trump administration. But the Treasury is telling us that we're not expecting anything substantial. We don't even think that we're going to have to fund our debt, different parts of the curve. And that's enough today, where at least for the time being, to help propel those notes and bonds higher. Fed rate cut odds really don't move. Is this enough for us to say that the bottom is in, that this inverse head and shoulders pattern is here?
Well, I think in technical terms, certainly the structure here suggests we have just rounded a major bottom. I don't think there's any other way to say it other than this looks like the confirmation of a major bottom and signs of a meaningful upside breakout. I think it looks even more pronounced in ZN than it does in ZB. You could maybe make the argument in ZB that you're still running into some semblance of former support come resistance. You're not seeing that in ZN. This is as clear-cut of a breakout as you could imagine. And if you want to kind of extrapolate what this means in terms of where yields are going, it looks like you're on deck to come down to something like 4.16, 4.15 from the current 4.43 on the 10-year. So you're talking about something on the order of a rate cuts worth 25, 30 basis points lower on yields. So that's meaningful, even just in technical terms. The catalysts for this today, much like the catalysts for the gains in stocks, also come from the data. We got some really weak U.S. economic data today. There was the preview of the S&P Global PMIs, the flash version, a couple of weeks back, and it showed this unexpected deceleration in the U.S. service sector, while the manufacturing side not only held up, but actually improved somewhat and actually returned to growth. We got final confirmation of those numbers here today. And then the ISM, which is a rival set of PMI numbers from the Institute of Supply Management, they confirmed it also and showed a sharp slowdown in U.S. sector growth and a sharp slowdown in particular in services, which is, of course, where U.S. growth has been and what has held up global growth writ large since basically May of last year. China and the Eurozone slowed in the meantime. So as we've talked about a lot, this has been a one economy sort of global growth story, and that one economy is going the wrong way suddenly. Now, of course, from the interest rate view, this means that the Fed is a little bit less constrained in terms of its intent to cut. And so you see that when those numbers come out, stocks come alive and really start their move higher because they want those rate cuts. And you do see that yields take that cue as well and come off.
The services PMI data today shows a number of things that could be considered concerning. We see that while the economy is still growing, it's growing at a slower pace, and it's potentially been slowing down over the past 7 months. I've had a long-standing issue with the PMIs, at least in the post-COVID era. And while they've become a little bit more accurate, we've seen from the actual economic data from the GDP now, those have been a good gauge, so to speak, of what to latch onto. But this is an important piece of the story, that the economy is not overheating. It's strong,
yes,
but it's not blowing away. It's the reflation isn't spiraling out of control. Price pressures are still increasing, but at a slower clip. We've seen them in the expansion territory for 92 consecutive months, which is overall alarming. But the economic strength remains, right? The economy is growing overall, maybe at a slower pace, but it's been growing for 56 consecutive months, according to the PMI data. And that's kind of the Goldilocks, right? The Fed can cut. They don't need to worry about the overheating, but we're not looking at recession for the reason why they're cutting. So in turn, is this a report that tells us that we're still in the maintenance cut world, Ilya?
No, maybe not. No, maybe not. And we don't know for sure yet, but this is a 12-month low on U.S. growth. That would be fine if we had relatively well-distributed growth. Obviously, we've had a very buoyant service sector in the U.S. over the past year or so. Obviously, AI and related things have helped us to get there. But the problem is that because it's been the U.S. service sector that's been powering the U.S. economy, most of that demand has been serviced domestically. So all of what we typically do in terms of spreading U.S. economic growth to everybody else by importing their stuff hasn't really happened. Goods demand has been anemic. In fact, if you look at the latest inflation numbers, you can very clearly see all of the inflation is in core services, and goods inflation is actually negative. There's no demand there. So U.S. strength has not spilled over elsewhere. As a matter of fact, since the end of the first half of last year, the Eurozone has slowed. China has slowed. China at this point is basically at standstill, and the Eurozone just barely managed to grow in January after contracting in the prior 3 months. So we're looking at an economy with no safety net. If the U.S. economy then starts to slow meaningfully and its outperformance starts to wane, there's no one to pick up the slack. That means global recession. And if you, or at least the risk of one, and if you get there, well, then the Fed's problems are not going to be about maintenance. They're going to be about countering a vicious global economic cycle that starts to feed on itself in the worst kind of way. We're nowhere near there today. But the risk in this kind of a sharp slowdown in U.S. service sector activity, if we see it for the next 1 more month, 2 more months, if this is the start of a trend, then we're looking at a very troubling situation indeed because of how disbalanced the global growth mix is.
Dylan, we haven't heard from you yet. We just got Ford earnings out here. They beat expectations, but their guidance is really weak. They think that there are some concerns in the pipeline. There are market headwinds. There's issues related to potential tariffs. Is this something that's good is this something that's good that we should be rattling economic policy so that it hurts our automotive
no,
companies?
but I think the market, I think everybody learned a big lesson last weekend, which is just not to take any of the words too seriously. So like that the rhetoric is going to be much less effective going forward because of what happened with Canada, in my opinion.
Do the plans for a Trump Tower in Gaza have anything to do with your assessment that he's not to be taken so seriously?
I mean, clearly. I mean, I think I was thinking about him today. Is that it's almost like he tries to put the most outrageous things out there as a way to then make the non-outrageous thing more palatable. Like that it's almost a negotiating tactic to say, oh yeah, we'll move everybody out and we'll give it to America. And then it's like, okay, well, if you don't want to do that, maybe we'll do a two-state, maybe we'll do something that's a more traditional solution. I mean, there could be an aspect where it is sort of negotiating genius.
It kind of has that vibe where he was like, you know what, it's a mess over there. I can't imagine why the people would want to move in. Let's figure out a place for them elsewhere. I'm sure they would be happier as a basis to say, well, I don't know why they want to go back, but I guess.
Is this like the typical rep mechanism where something outlandish is staked out and it's either a brilliant negotiating tactic or it's great policy?
I don't know if it's brilliant, but it's definitely a negotiating tactic.
No, but like this is what we hear. Like either way, though, like look what he did. He got a solution in Gaza. If he didn't threaten to take it over, it would have never happened. Or right. Like if we actually start taking over Gaza, it's like, look at this. We now have the 51st state in the Middle East. This is a great idea. I don't know. In terms of like actual risk, though, Dylan, I guess the point I'm getting at is at what point do we think that this becomes a problem for the market? The market doesn't seem to care what's happening with Elon Musk and Doge and Trump's proclamations. Are we just going to ignore it all until something really bad happens?
But is something really bad going to happen? Or is it just the theater? I mean, I think that's the question everybody's asking, because at first everybody's like, oh my God, something really bad is brewing here.
Right.
But I think that the more as everybody sort of acclimatizes to the Trump cadence of sort of constant in information that people then start to think, okay, well, maybe the actual consequences of all this information may not be as severe or immediate as we fear.
Before we go further, Qualcomm earnings are out. They are trading up a little bit here. 341 EPS versus 296 expected. Not a small beat there. Pretty big one. Revenue 11.67 billion versus 10.93. So revenues are up 18% from 9.92 billion a year ago. Net income's up 15%. In terms of their outlook, they still see big demand coming forward, big demand from China. It's also not up a lot, which I think says a lot about how the market's been looking at some of these names on the chip side this earnings cycle. If you've been meeting expectations and guiding higher, you get a little pat on the head, move along. If you miss, you've been getting the stick. Qualcomm aside here, we look at a market, a NASDAQ now that's pushing higher here after hours. NASDAQ now overtaking the S&P up by 0.55%. Ilya, yes, we're still in the trading ranges here, but it feels like, as the point I'm rounding out to with Dylan, I may not like what Trump says and how he's going about it. The market is clearly desensitized at this point in time.
It certainly doesn't seem to care, no.
If Vladimir Putin came out yesterday and said he's going to actually take over Gaza and rebuild it, we would be having a different media response, different market response today.
Yes.
So, right? Like, it feels like if Olaf Scholz
without
said
question,
that, right? If Giorgia Meloni said that, Dylan, do you think that we'd be reacting in the market here the way that we are?
If Giorgia Meloni said we're going to take over Gaza and develop it
maybe
as an
more
Italian
positive
beach resort,
yeah,
maybe more positively.
But
I mean, I think people like the Italian beach resort, so I think that would be an upgrade relative to the American beach resort.
Aside from the fact of displacing like 1.8 million people, which is a problem unto itself, like,
sure,
why is the market not caring that this? If Putin said this about Ukraine, we all freak out over here. If Xi Jinping said, we're just actually going to take over Taiwan and redevelop it,
or instead of Taiwan, we're going to take over Gaza, you can keep Taiwan.
or China says we're going to take over Gaza and redevelop it, right? Like, how would the market be responding to that? And the market seems to doesn't care. It's not taking it seriously whatsoever. That's not a small thing to say.
If you put it in the context of sort of the madman theory of geopolitics, which we clearly see being deployed not only...
that's what this is.
Right. I don't think anybody is surprised. I mean,
that's why I think
this is not...
The question is... Yeah.
It's not removed from the 51st state of Canada, right? Like
exactly.
These are equal grade preposterous things to say.
But also the market now is pricing all of these things as preposterous.
Yes.
Which I think can go one of two ways. Either, I don't think it's, listen, he doesn't want the stock. I think he likes to create political reactions and reactions in his political opponents, but it's not in the president's interest to have the stock market crash every time he says something or sell off every time he says something wild and crazy. So, I mean,
that's right.
Kind of, he gets the best of both worlds because he gets the sort of hysterical response from his political opponents without the market punishing him for absurd commentary that the market's already decided is never going to happen.
Other than the tariffs, which they clearly think is a credible threat because they did respond to that, and they only just gave back a little bit of ground when this came all the way around, and he canceled it, at least on the North American portion of it. We only just closed the gap. So the market is not rewarding the backing away from tariffs with a blistering rally. We're ignoring the preposterous, but when we get to something the market actually thinks is policy that's doable and it's ultimately shelved, you don't get exuberance. We're still in the same range we've been in since early December. If the market was like, okay, all of it is preposterous, he's not going to do anything completely out there, so the tariffs are in the realm of annexing Greenland and Canada and Gaza, obviously not. obviously the market is differentiating.
You talk about the trade war and how people aren't taking it seriously. I think one of the most important things that happened in the market today, or rather last night, was that the PBOC didn't deliberately fix their yuan at a weaker exchange rate than they could have. For the past several months, they've been preventing it from eclipsing, like, depending upon what market you're looking at, the official fixed rate near 7.2. If you look to the spot markets, it's closer to 7.3. But they really haven't been allowing it to weaken beyond there. And in 2018, if people want to go back and look at this for themselves, you'll see that when the tariffs arrives, the China tariffs arrive in March 2018, dollar yuan just skyrockets. China immediately turns the knobs and says, do you want to give us a tariff? We'll just weaken the currency to offset it completely. And this time around, they're not doing that. Sure, Xi Jinping didn't take Trump's phone call because he's not Canada or Mexico. This is China we're talking about here. And he's not going to crawl back to the U.S. economy and the U.S. president the way that the Canadian prime minister and Mexican president did. But the first response after denying that phone call wasn't then to begin to take measures behind the scenes to offset the effect of the tariff. And snap effectively.
There was retaliation. It just didn't go the way of the yuan. I mean,
it didn't go the way of the 2018 trade war.
Right. And I think we're still negotiating, to your point.
But that's the key, that we are actually earnestly trying to negotiate here, and this isn't just ratchet up, maximum pressure. Right. And it's not even becoming a tit for tat right now. So if it's
strictly speaking.
No, and there's again, like, expectations were Trump's going to go 25% tariffs across the bow, regardless of what country it is, and now it's like maybe 25 for Canada and Mexico. Just kidding, 10% for China. It's a lower bar, so are they still problematic? Is it still going to hurt GDP? Yes. Is it still going to boost inflation? Absolutely. Is it the wrecking ball that we feared it would be? And is China responding in the manner that would think that we're heading into a negative feedback loop of escalation? I would say no for the moment. And I think that's a good thing for risk.
I mean, when you, again, look at this and you say, okay, the markets clearly seem to be differentiating between pronouncements in column A, which they're just writing off as ridiculous and meant to drive a news cycle and create the perception that a madman is out there saying whatever and doing whatever, and you'd better placate him lest he do something crazy, which seems to be working, by the way, at this point. And then stuff in column B, which is, oh, wait, this might be an actual policy risk. And clearly the response to the tariffs was, hold on, this is an actual policy risk. And when the tariffs were taken away, you did not get the markets exuberant. You just got them to get back to square one. That's very different from the response to things like, we're going to take over Gaza and annex Canada and buy Greenland. Those didn't even merit a response. Nobody cares. It's insane. It's not going to happen. It's just talk. So there is clearly a difference here. So I would be careful about extrapolating it necessarily one way or another, because if the market thought that there was no Trump chaos risk to policy, we would be much higher and not sticking in the middle of a range that we've been stuck in now for 2 months.
Dylan, we talk about this trade war, what it may not be. We're kind of talking about it in joking terms. I know a lot of people feel like if you learn Trump speak 1.0 from the first term, you got to take him seriously, but not literally. You know, a lot of pundits were saying last night, well, don't take the Gaza comment seriously. He's just trying to tell the world, you know, this is a mess and something's got to change. And if you guys don't clean it up yourself, I'll do it in a manner that you guys won't like. So you better do it yourselves. When do we know that, again, I asked this yesterday, when do we know that the boy who cried wolf perspective here, not to overreact to everything, runs out of runway?
I mean, what do you mean runs out of runway? I mean, I think there's an unlimited runway to tolerate it, only because there's no other choice. You know, the runway is 4 more years of this. And so that everybody has to sort of adjust to a different information cadence and a different discounting mechanism. It's like Donald Trump using his marker to redirect a hurricane on the map. Nobody thinks that the hurricane's actually going to skip from Louisiana to Florida because the president drew it that way with his Sharpie in real time. And so it's not like they start boarding up the windows in Miami because the president redrew the hurricane. And to Ilya's point, I mean, it's sort of like there's a decoding that happens, which is the United States is not going to take over Gaza and move everybody to Egypt, but the United States is maybe willing to threaten to make things worse if a better solution doesn't arise. And basically, it's a carrot and a stick. I just think he creates outlandish negotiating boundaries in the hopes of creating more of shaking loose otherwise intransigent issues.
With some success in some areas and not in others, essentially.
Yeah, I it's so funny. I've seen look, if I was president, would I be threatening to displace the Gaza, people of their Palestinians, whatever you want to call them? No, I wouldn't. But this is clearly moving the needle, and it's ironic that you have statements coming out from Hezbollah and Hamas and Iran saying that Trump's comments are threaten to destabilize the region. Maybe it's also destabilizing the region. October 7th was pretty destabilizing for the region.
Yeah.
So, if you didn't want Trump making these comments, it's a tough situation. We'll see how it plays out. Boots on the ground in the Middle East for U.S. presidents has not worked in my lifetime outside of a very brief window in Kuwait in 1991. But we'll see if this time's different, guys. We're not really moving much.
And by the way, very different for this president, which doesn't seem to, or at least in previous versions, has not wanted any U.S. involvement in the Middle East, and generally dislikes U.S. military entanglements abroad. Is kind of an isolationist that way.
I know, and I've seen the chats from the past 2 days, and I want to just take a step back here from this conversation. I know that people don't like when we talk politics too much, and this is not debating, is this way the best way of doing it or that the best way of doing it? This is, how do we decode Trump speak to know that we're putting our chips in the right place? Because if you woke up on Sunday and said the market's going down, Trump says tariffs are coming, I'm getting short and mortgage in the house to do it, this is it. Right? And if you said, after DeepSeek, the same thing, where are we? But also, if you got really bulled up, you haven't made much progress here because there is that air of uncertainty. So time horizon, the market relearning Trump speak, a topic Victor, Tom, and I have talked about in recent months on Let Me Explains and on the election special. This is a process right now that the market is learning what to do. And if you're surprised by that, just think about the juxtaposition. Right? Half this country thinks the last president's name was Sleepy Joe. And now we have a president who's signing executive orders every single day and holding press conferences every single day, firing from the hip. It's a different cadence, for sure. Guys, sector performance here today. Of the 25 that we track, only 3 are in the red. 22 green, led by biotech, 2.45% higher. IBB, the top performer here. GDX up by 2.52% itself, the second best performer. Guys, on last call, we can stop there for a second. Tom is noting how he thinks commodities are cooked. Gold prices trading up at $288.1 right now, $2,881, 90 cents an ounce. They technically settled in at $28.93. They hit a high of $29.06. Ilya, do you think commodities are cooked up here?
It's difficult to think that they are, but it's not impossible if what we are in fact seeing in global growth dynamics from this PMI data is the start of something. We've been operating in a very disbalanced growth kind of world. Everything we've been watching has been about the U.S. economy has been stronger than expected. We need fewer Fed rate cuts. We are in a reflationary environment. This latest growth data is a very serious departure. Now, granted, it's only 1 month. We don't know yet what's going to happen, and it's January. Last year, January was relatively week to where we ultimately got as well. As a matter of fact, for the S&P Global number, the reading on this January and last January is exactly the same. That's what makes this a 12-month low. So it's 1 month, let's see. But if this very, very brisk downstep in U.S. economic activity in January is something that's going to carry forward, well, then inflationary expectations aren't what they are. And we need to come back down. Not only do we need to come back down, we also need to see that there is a different view on Fed policy expectations, on growth expectations, the world over. That shouldn't be good news for commodities, just on demand grounds. And we're going to have to see if there is a countervailing thing there from U.S. dollar weakness. Because if yields come off, the dollar will weaken. Most global commodities are priced in dollars, so that should give them something of a lift in dollar terms. This is a tenuous moment here. Eventually, they should come lower because the dollar finds a haven bid if there is, in fact, some sort of a global recession risk and things start to really unravel in a risk-off way. But that's probably a ways off. I don't think we're seeing anything that catastrophic here, and we'll learn over the coming months if there's even a meaningful risk of such a thing. But near term, you're looking at a push and pull between the influence of probably a weakening dollar and cooling demand perspectives, which is probably why you have the sort of splintering that you have today between crude oil and gold. Gold is up. That's not a growth sensitive, a cyclically sensitive thing. Crude oil is down because it is.
Crude oil is such a pain. It's creeping back up. The IVR is finally 30 again, hit a high of 35.14 today, but volatility also is at a low of 9.1 in the IVRs. Dylan, for the perception of all this geopolitical event risk, are you surprised that oil isn't seeing a bit more action? Or is this the clue that there's no geopolitical event risk? Because a Gaza comment like that, you'd figure would have a little bit more impact.
Yeah, I mean, I think that's it. I think if anything, I think probably some people are disappointed that there's not more action, that there's not more of an opportunity. That I think it's a testament to the market that they're able to discount this so quickly, that maybe the economic data Ilya was talking about is maybe more consequential than any of the presidential rhetoric, which you would never think would be the case, considering that the tone and temperature of the rhetoric is so outlandish. But again, because it's so consistently outlandish, it's already been, I mean, to the degree to which it's so quickly discounted.
That might be, in fact, the most important thing. I think Dylan's hitting the nail right on the head. It's not that it's on balance outlandish. It's that it's within the bounds of the expected outlandishness for this particular administration and how they negotiate.
I also think the fact that you've had Jared Kushner out there on, he was on a Lex Friedman podcast a few months ago talking about how he thought that Gaza would be great waterfront property. So if you think that Trump's just talking, it's like, well, clearly the groundwork has been laid for a while here to get this idea out into the public sphere within his own particular circles. But does the market think this is going to lead to conflict? I mean, that again is the question, because if you saw the comments yesterday, you said, what could this possibly mean? I'm going to get long crude because we're going to see a big explosion of geopolitical risk here now. You know, if Trump can say he's going to take over Gaza, why can't Putin say that about Ukraine? Why can't China say that about Taiwan? Market is making a judgment that the answer is a definitive, we'll worry about that later right now.
For the record, the idea that Gaza is a missed opportunity for another Sharm el-Sheikh is a conversation that's been going for maybe 30, 40 years.
Exactly.
I don't have a response to that. We can go back to some of these other sectors performing well here. So gold does have its move up. GDX is the second best performer. Semiconductors making a name for themselves, though. SMH up by another 2.35% after hours here. A little bit weaker, 245, 246, depending upon what you're looking at. Otherwise, home builders find a little bit more of a rebound. These have really been beaten down. The National Association of Home Builders the other day put out a press release after the Canada and Mexico tariffs were announced, and they said that this would raise the cost of building materials by 25%, leading to a worse housing affordability situation. It would deprive them of the labor as well as the materials that they need. Do we have any strong feelings here, Dylan, on home builders? I feel like this should be a cyclically strong sector, given the fact that we don't have enough housing in the country, and we have a real estate guy in the White House who's been pleading for lower rates. But the reality meets the rubber. If we have tariffs, then lumber prices can go through the roof. So what do you make on the U.S. housing market here as we go into 2025?
No, I would say you don't have an opinion of that. I agree with everything you just said, but if you're going to have an opinion of the U.S. housing market, don't you think you need to have an opinion on rates? And I find it interesting that rates have actually been coming, market rates have been coming in incrementally over the past few days. And I mean, I guess so. Which is to me is another indication that there's not going to be a trade war. Right, that all the jabbering about tariffs and trade war and lumber and commodities and blah, 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 if that was really something that was an actual concern, why would rates be coming in? And so I do think that a home builder position, although while I don't have one on, I have to say I like the idea of exploring one as a way to basically look past the more hysterical rhetoric and into something that's more reality based, which is that there's not enough housing and that rates are on the margin coming in, that they're going to get lower over the next 6 months, potentially not higher. And that inflationary pressures are not what all they're cracked up to be, because the trade war is never going to happen.
Which is exactly what we've been talking about yesterday and today, that essentially the main implication of all of these shenanigans this week should be, well, if the trade war was something that the administration wanted as a policy outcome in and of itself, because it thinks that it needs to rebalance trade, and the way to close deficits is with tariffs. So they say, obviously that's highly debatable, but that's been their view. So it's either that or they're just a negotiating tactic. And this week showed us they're just a negotiating tactic. So then surely some aspect of the reflationary impulse from mid-September that was contingent on there being tariffs and the trade war, surely that now has room to get baked out.
I'm looking at XLB more so than ITB or XHB, I think, at this point in time. I don't have a trade in here right now, no position in either, but XLB would be the stuff that kind of goes into homes, right? Think of the Sherwin-Williams of the world, companies that make products and chemicals. And if we're talking about a potential trade war or no trade war, these are the kind of things that go up in demand. When Trump wins, initially we get a pop, but then the share prices or the ETF price comes in fairly rapidly over the next few months. But it feels like that's because of trade war concerns. So if trade wars are not going to happen, these companies are able to maintain their margins, and we do have an economy that's still rolling, this material sector could actually be a little underpriced here. This is a nice little flag as well as we head into this second half of the week here. Ilya, you know what's received zero attention the last few days? Non-farm payrolls. We still have economic data in this country until Elon Musk's, Doge team by accidentally deletes all the data. But until then, we still have economic data that matters. Non-farm payrolls this Friday. Yes. Does today's ADP report help provide any color to that outcome whatsoever?
Nope. ADP report's not a good indicator for what NFP will do. The two are very disconnected. Now, of course, people do still watch the ADP report because it comes out and it is an indication of something that is an important sort of thing, the labor market. And so, needless to say, people do pay attention. And when you get the kind of thing that we have today, which is basically an outcome that's, let's call it marginally better than expected, but not very different from the prior, it could get people to pay attention if nothing else was going on, but other things are going on, and a relatively steady ADP report is maybe tertiary, if that, on people's radar after the kind of ISM and S&P global numbers that we saw. So unclear that it means anything. What's interesting for the NFP number, of course, is that we heard from President Trump this week that he thought Powell and company did the right thing by holding rates unchanged at the last meeting. That was an interesting little change, because obviously we assume, looking at some of the other slightly older commentary, where he was just at the Davos World Economic Forum saying he knows more than the Fed and they should consult him and we need lower rates. Something happened there, maybe, in between that and what we heard this week, because now he seems to think that the Fed doesn't need to cut rates in a hurry. And the economy seems to be cooling, which actually might get the Fed to go that way anyway if it goes on. So it'll be interesting to see against that backdrop what the actual official NFP numbers are. The expectations aren't for a really meaningful departure this way or that, but it will be very interesting to see what all of this means. 170K is expected for the official numbers, which is very closely in line to what ADP gave us today. 183 this month, or January, this update, versus 176 last time. So fairly steady if it holds in line with expectations, but we know labor markets are slow, and if the new orders data that we see from the PMIs, which is worryingly where a lot of the weakness is, if that's foreshadowing what's coming next, this will be a very this won't be a report that will get anybody any cheer, even if it's somewhat benign. It's the average hourly earnings numbers then that we should be watching.
Dylan, do we care about economic data in the second Trump term?
Absolutely. I mean, I think that economic data is always something that we care about. And if anything, as we sort of get desensitized to the rhetoric, I think that we're in a situation where the economic data takes on even more merit, because the question is how much it's like between the things that the president says and then the things that the president actually does. Where does the economy shake out in between that? And to what degree is the disruption of the psychological disruption of the new cadence relevant to economic activity, if at all? And to the degree to which economic activity maintains strength because of AI, because of general efficiency, because of ongoing trade, because there isn't a trade war, you know, how robust is that? And ultimately, the world is driven by rates, and rates are a function, at least in part, of all that economic data.
Guys, we have 15 minutes left here. I'd like to play a little bit of a game, perhaps. For those that have been following the AI story, ChatGPT, OpenAI, just released a new O3 reasoning model that's able to use their deep research feature. I know DeepSeek and deep research are confusing, but deep research is considered by the people that I follow to be on par with like a PhD candidate student in terms of capabilities. You send it on a task, it comes back a few minutes later, a few hours later, a few days later, with comprehensive reports on the topic that you're looking for. So this has been going around on Twitter and FinTwit the past 2 days, asking deep research what jobs will be replaced by, well, deep research. I was curious if you think that any of these jobs are worth keeping around. And I don't mean that in the fact that like, oh, well, these people who are doing them, they're not worth anything. No, jobs bring dignity for people. But there are certain jobs that just go by the wayside as technology advances, right? We don't have as many people, for example, tending to horses and buggies these days. We don't have as many shipbuilders in the country. We don't have nearly as many people who are working on farms. So some jobs over time as technology advances just disappear. The number one job that the ChatGPT deep research sees disappearing in our lifetime with a 98-degree certainty with some interesting citations, so maybe not its own math, is tax preparer. These are some of the more interesting ones, though. Bookkeeper, paralegal. Guys, are we in trouble? I scrolled down and saw number 18 here, market research analyst.
Mm-hmm.
Dylan, a lot of these are customer service jobs. They are people-facing jobs. I can't help but wonder, is one of the, when we think about AI, and I think about at least in the future, I think of an AI that is basically like sterile, cold, calculating, very precise, right? It's going to displace, it's going to lead to this dystopian future where it's going to displace all of these blue-collar jobs. There's going to be mass unemployment, only the wealthy, and their, dystopian cyber future will be able to have resources, Blade Runner kind of stuff. But it kind of feels like the reality is that we have an AI that is really imprecise. It's very creative, but it hallucinates. And it's not going to be replacing blue-collar jobs. It's going to be replacing white-collar jobs. Are we about to see perhaps income inequality in this country resolved by the fact that a lot of these upper middle class jobs that are on this chart here, copywriters, paralegals, tax preparers, are going to disappear? Is this more important than Trump?
Yeah, but I mean, I think what I'm thinking about is, have you seen the Mark Andreessen commentary where he talks about how the consequence of AI and all these things is going to be a massive collapse in the cost of everything?
Yes. Commoditization of everything, basically.
Demonetization of everything. So on the one hand, while the white collar wages and work, lawyering, journalism, tax accounting, marketing, these types of things are going to be substantially reduced, that at the same time, the cost of everything is going to be substantially reduced. And I think that the risk is that you see that the reduction of the incomes, that they don't happen at the same time. And that there's a moment where the income inequality is resolved, that more people end up having less money basically quickly at a time when the cost of things doesn't decline in a commensurate manner, especially something like the cost of housing, which I think is going to be the greatest risk to the whole situation. I mean, you simply cannot, you have a situation where you have two classes of people, those who have been in or are in and have been in the real estate markets and can survive and sustain throughout the real estate markets because they already have a nut and they're inside the cycle. And then everybody who's outside of that cycle, that basically it's impossible for them to become a participant. And I think all of those things really are on the one hand, they're at the risk of being very exacerbated by AI, and at the same time, AI is maybe the only thing that can resolve them. And it's a question of whether it happens in an orderly and matching manner, or whether it happens in a disorderly and chaotic manner. And maybe I'm pessimistic, but it's hard to see how it doesn't turn out to be more largely disorderly and chaotic.
I mean, I think if you take a look at the idea, which seems to be relatively bipartisan, that what we're looking at is the need to reindustrialize the U.S., and this is the whole the breakdown in sort of the more globalized norms that we've seen develop from the late 80s, early 90s up to now. Obviously, deglobalization and more nearshoring, friendshoring, all of these things. That's something that's a consensus issue now pretty much everywhere, but for China, which depends on there being this robust global system for it to be the middle step in. And not surprisingly, they haven't grown post-COVID because the trend has been against that direction. So we obviously already have this sort of desire to rebuild U.S. industrial capacity. So it seems relatively clear that those jobs are probably not going to be in aggregate suffering a great deal of losses, and in fact look to probably see some gains if this is what we're going to do. You have to, I think, then put what's going on at the white collar side of the ledger in the context of the demographics. We are seeing the biggest current generation in the labor force already massively exiting that labor force. The boomers are, if not already retired, then retiring quickly. The issue got accelerated quite a bit during COVID. In fact, most other cohorts have a close to 80% participation rate in labor markets, and the boomer cohort is now meaningfully less than half. So we're looking at a situation where if there are jobs to replace at the higher rungs that boomers have been holding, people that have been in lower rungs are about to get a generational opportunity to step up and assume those roles where there is more creativity rather than rote repetition, which is what it looks like the machine is going to take over.
Guys, we have a few minutes left here. An item of interest that's popped onto the radar here in the last few days, last night, I figured we'd talk about it today here. The Fed's reverse repo facility is basically zeroed out, according to the most recent available data. We hit a high usage back in December 22 when we were at 2.55 trillion. We're now at a paltry 78.79 billion here. Ilya, I was told with absolute certainty that as the RRP facility was zeroed out, it would mean that all of the excess capital bank reserves sloshing around in the system would be drained. And by getting drained, we were going to see asset prices come down dramatically. Can we put to bed the notion that an expanding or declining reverse repo facility means anything for stock markets?
I don't think it ever meant anything. A certain
website, Hero's Edge, often talks about it as a doom and gloom type of topic.
Yes, well, they're given to doom and gloom, and so they tend to find it when they look. There's a wonderful old Soviet idiom which proclaims, "He who searches will always find," and so when you search for doom and gloom, believe it, it'll be there. Confirmation bias, as we know, is the most satisfying of all the biases. And so when you look at the reality, the mechanism here was designed to keep rates from getting too low in the Fed's architecture. It was just a management tool to prevent rates from leaking lower than the Fed's target band. After the rate hike cycle, this entire thing has been basically moot. None of this really matters. None of this meaningfully impacts the cost of money. The Fed is right to say this is just maintenance plumbing. This doesn't actually impact the cost of credit. There's nothing to see here.
The Federal Reserve summed this up, that the increase in overnight reserve repo take up in 2021, 2022, and then into early 2023 was just driven by the fact that there was a rise in banks' balance sheet costs due to expanding supply of reserves in response to the COVID-19 stimulus efforts. So there's just extra cash floating around. That's it. Nothing more. Not world ending. So yeah, are those things unusual? Yeah, of course, during emergencies, there are emergency measures put in, right? When you're flying the plane, those little masks that come down from the ceiling, they're not always dangling there. Like the reverse repo facility being used is a sign that you're in a crisis, but it doesn't mean that unwinding of that facility is going to be the end of the world. I thought it's...
Well, and also the reserve repo facility was giving you higher rates amid the hiking cycle than were available elsewhere. And so it was a nice little place to park your money for a while. But now that the Fed has reversed course, that's no longer the case. It was an episode. It's been over.
It's been over. Dylan, we have 3 minutes left here. Tomorrow for overtime, we only have a half episode, it looks like. We'll confirm that later. We have a new episode of the Prediction Trade that's coming out. Myself and Jeff Joseph were able to sit down with John Rothschild, who, just read about him. Excellent trader, has written a number of books on sports betting. You got to check him out. He is the guy's guy for that. That's going to air tomorrow. It's currently just was posted on our YouTube trending channel, so be sure to see that there as well. Good job on the team, high production quality. Dylan, before we close the door here, though, what are your final thoughts as we go into the second half of this week? Is anything surprised you about the first?
I mean, I think that
this year?
I would say, if anything, this is now a game of it's like a classic situation of keep your eye on the ball, and the ball is not the words of the president. It is the economic data that gets identified by people like Ilya. It's the earnings that are happening. It's jobs. It's everything from the jobs number to the inflation data to rates. And that the more strictly we can adhere to paying attention to that, and the less you're distracted by the distraction machine in Washington, D.C., the more pleasant your life will be, the more calm your life will be, and probably the more profitable your trading will be.
I don't know. I think chain smoking cigarettes, watching C-SPAN's been pretty alpha.
Pretty de-stressing. That's your de-stress.
Yeah.
Time to relax with a pack of Marbreds and some C-SPAN.
C-SPAN on the Peloton?
On surround sound.
Yeah.
So you can
I
hear
think that sounds like a lovely night, Dylan Radigan.
I mean, in fairness, the old moniker "Are you not entertained?" Makes all the sense in the world when yesterday you might have been taking over Greenland and today it's Gaza. So really, it's a livelier C-SPAN than in recent years.
It's a fine bit of programming.
Well, with that, overtime is out of time. We'll be back tomorrow, same time, same place, right after last call, 4 p.m. Eastern, 3 Central. For Dylan Radigan in Milan, Ilya Spivak in San Francisco, I've been Chris Vecchio in New York. We'll see you later. Ilya is here. He's back for Macro Money at the top of the hour. I'm back with Victor Jones for The Price of Truth, so be sure to come back as well. Tasty Live at Night starts now.
See you there, everybody. Bond markets surging, gold surging, the dollar on the back foot. What does it all mean, and do stock markets care? That's the question we're going to be asking ourselves here today after we get some economic data that raises the specter of another global recession concern. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And what we're going to be looking at here is a set of economic numbers that's come out over the past 24 hours, raising some worrisome concerns. And then take a look at the next big inflection point in the global macro story, the monetary policy announcement from the Bank of England. Let's talk about global growth first. And to put this in context, here is a look at the JP Morgan Global Composite Output Index. This is a purchasing manager index for the world at large, and this is the composite. That is to say, it takes in both the service sector and manufacturing. And it's overlaid with global GDP, just to give a sense for why we care about this. So you can see the PMI numbers approximate the trends in GDP, but also run more timely than them. We have the GDP numbers for most of the world coming out quarterly, and even then with a significant lag. The PMI numbers come out monthly and come out with quite a bit less lag, and as we can see here, approximate the trends with good alignment. So you can get a sense for where global growth is going much faster than GDP numbers will tell you that in these PMI numbers, and this is really why we care to look. As ever, the numbers are structured such that 50 is neutral, neither growth nor contraction. Above 50 is expansion. Below 50, economic activity is shrinking. If the further you go above 50, the faster the expansion. The further you go below 50, the faster the contraction. What we got today was an update of these global numbers for the month of January. There's been a release cycle that's been ongoing for a few weeks now across all of the major economies, and S&P Global typically puts this together with a number of global partners, as you can see the aggregate here done in conjunction with JP Morgan. And what we see should be sobering indeed. We have a 12-month low on global growth. So take a look at this composite index here in the blue. First of all, we see that global activity has been decelerating since the middle of last year. Obviously, that's a very significant contrast with what's been going on specifically in the U.S. More on that momentarily. But what we see here is that this down move here, not coming from the anemic manufacturing sector, which returns to growth here, only just so, pops back over 50 in January, but from the service sector, which heretofore was the source of strength. As a matter of fact, we can see for the global averages, it is the service sector that's held up the total. Manufacturing has been going down and then sticking around basically a flat line. Why is this so scary? Well, as we've said many times before on the show here, global growth is made up primarily by three economies: the US, the Eurozone, and China, which together add up to 58% of global economic output. The remaining 42% are vendor economies for the most part, dependent on demand from the former three. So their influence is actually even greater than the 58% implies. Think the U.S. And the relationship with Canada and Mexico, obviously, as we've learned, to great effect this week after the Trump tariff back and forth earlier in the week, where the president levied tariffs over the weekend, only to take them away less than 24 hours later, or at least to postpone them for a month. Think Eurozone and Central Europe, or Nordic Europe, or even the UK. Think China and all of the Latin American commodity exporters, Australia, New Zealand, the commodity exporters in Africa, certainly most of Southeast Asia. All of these economies dependent on demand from China. So these three economies really are the pillar of where global growth comes from. And so when we see this slowdown right here, it's not just that it's slowing, it's also how the distribution of the slowdown looks that really makes this so concerning. It comes from the U.S. The last set of PMI numbers here